Flat in the session today after the weakness that's come through this week. OPEC Plus, they're going to be meeting on Zoom, not in person. That's a check in terms of cross-asset. We think as well about the data that came through from Germany in terms of Q1 GDP growth, in line with the survey, but contracting 0.1%. Bloomberg Economics thinks the hit to growth could be around half of a percentage point next year as a result of these budget constraints. Futures then pointing flat in Germany. FTSE 100 futures looking to drop 0.3%, down 24 points, below 7,500. The CAC over in France looking to trim around 7 points, so far flagging losses of 0.1% after 3 straight days of gains for European equities. Let's check in then on this open, and the China story is really important as well, because investors have been fading the gains that have come through from the property and real estate sector across Chinese markets after some significant measures to try and put a floor under that sector and the crisis that's fading. But in fact, in the Chinese, the FTSE 100 is down 0.1%. We'll look at basic resources and see how that as a sector is adjusting to the China news flow. And of course, the other factor to think about is the pushback that's coming through, at least here in the UK, from some officials at the Bank of England. Hugh Pearl speaking to the FT saying price pressures remain very sticky. Does that lead to an adjustment around gilts? You saw the yields ticking up quite significantly, between 5 and 6 basis points on UK debt yesterday. Not linked to those comments, they came out this morning, but linked, of course, to that stronger than expected economic data. The FTSE over in Italy adding 0.1%. The CAC over in France is flat, and the Spanish IBEX is also flat as well. So not a lot of conviction right now, more of the pain coming through for the FTSE 100. Across your sectors then, let's flip the board and see how the sector story is shaping up, because it was energy that was at top of the list yesterday with the gains coming through, despite some softer pressures. We know that OPEC Plus, they're not going to be meeting in person. They're going to be setting up a Zoom call or a Teams call to meet, because they are divided over quotas, particularly for African members of OPEC Plus, and we've seen that ripple across the oil markets as well. There's also a really important question about demand as the global economy softens. But the context across the equities market, just stepping back, is that this month is set for the best month across global equities for about 3 years. Today, though, the European benchmark is down 0.1%. And across your sectors, financial services losing about 0.2%. Tech down 0.3. Autos also taking a bit of a hit, down 0.4%. And autos was amongst the bigger losers yesterday as well. Just one sector across the 12 main sectors right now in positive territory. That is health, up 0.2%. Further pressure coming through from basic resources. That's the China story, arguably, and that's going to be weighing on the FTSE 100, down 0.4%. That's a picture across your sectors this morning, this Friday. Just 2 sectors now in the green. Personal consumption, flat. Health, gaining 0.2%. Sophia Horta-Acosta from our Markets Today team joins us for more of the context around the UK story. It was quite notable, wasn't it, Sophia, the move in gilts yesterday on that stronger economic story. How are we thinking? Has the pricing changed around the BOE? What is your assessment of what we saw yesterday in those moves?
The pricing has changed, Tom. So now traders are pricing in 2 rather than 3 interest rate cuts from the BOE next year. What's interesting, and what we were commenting on the blog yesterday, is that actually these bets have changed on the back of that stronger than expected services PMI, which was in expansion territory, but it did not change when Bank of England Governor Andrew Bailey was pushing back against the market. So it's very clear that traders are moving on hard economic data and not on rhetoric. You're seeing Hugh Pill again today talking to the FT in a report that says that he's also warning that inflation might be stickier than expected. So that higher for longer narrative, it's sticking, it's coming back to the market. market, but it's coming back via economic data, and the market is really ignoring what BOE policymakers are saying. I think that's really shows where the market mindset is right now.
How resilient is the UK consumer in light of this? Gilt yields go up, mortgage costs go up. We know there's a cost of living crisis. Some of the data suggests there is a bit of resilience amongst the UK consumer.
It's strange, isn't it? Because you would think that people wouldn't really be spending more in this kind of environment, but data from GfK is suggesting that actually people are a little bit more confident. You're seeing inflation come down. There was a big drop in inflation at the last report, and also wages are still very strong. So that the gap between those two is what's helping. But people are buying furniture, they're buying electronics. That's what the report suggests. I would say, as a caveat, because I always like to bring in caveats, consumer confidence is still negative. It's still a negative territory. It has been for a very long time, for a number of years now. So while we cheer a little bit of an improvement there, it's an improvement from a very low base.
Okay, caveats are important. I'm seeing pictures now on the screen around Black Friday. It is Black Friday. We have all these sales going on. Is that going to be a catalyst? How much appetite is there expected to be around this discounted holiday?
I mean, from my very anecdotal survey of what people are buying today, it seems people are buying big ticket items, Tom. There was someone on the producer team buying looking at mattresses. But I mean, it's not one day sales that's going to kind of move the story on the UK consumer. You know, it's a long-term, it has to be a long-term confidence story. That wage growth being still higher than inflation, that's really what's going to move the needle. I mean, Black Friday, I think we were talking about it during the break. It's been going on for more than a day now. It's almost a week. It's almost a month. But it's a very important season, of course, for retailers heading into the Christmas season.
When you talked about our producers lining up a big ticket item, I was expecting something exciting.
Mattresses.
And then you came with mattresses. But then I'm thinking memory foam is kind of good. I don't know if you're in the memory foam camp or the spring camp, but if we're going to talk about mattresses, you have to bring in memory foam.
I think it's a very important investment for us, Tom.
You can get a 50% discount. I don't know. Producers out there lining up their mattress purchases. Sophia Hilter-Acosta, thank you very much indeed. I don't know who they are. We'll name check them at the end of the show. From our Markets Today blog, thank you. You can get more from the team, of course, on the front page of the Bloomberg UK website. Have a look, or by typing TLIV GO on the terminal. Here's what else we are watching for today. At 9 a.m. UK time, we're going to get German IFO survey results after, of course, Q3 GDP contracted by 0.1%. Really important to look at that survey as the mood around Germany sours. An hour later, ECB President Christine Lagarde is going to take part in a town hall in Frankfurt. At 1 p.m. UK time, Luis de Guindos, the ECB Vice President, will be speaking at a conference in Spain. How will they be thinking about the pain on the German economy? At 2:45 p.m, we are set to get S&P Global PMIs from the US. So the data out of the US as we look at yields ticking up, at least in the session today. Those are the prelim readings, by the way, for November. And there's more ECB speak at 3 o'clock with Governing Council member Pablo de Cos due to speak in Spain. Coming up, BASF jumping after a report that Abu Dhabi's ADNOC is weighing a purchase of its Wintershall DEA unit. The details on that deal that is in the offing. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today, 10 minutes into your European trading day. European stocks essentially flat. Let's get a checker, though, on some of the individual stocks. There's more interest there. Stocks on the move with Joe Easton. Joe, what is jumping out to you?
So we've got Barclays shares rising at the moment, up around 0.6%, cutting as many 2,000 jobs in the back office, according to a report from Reuters. Not yet confirmed yet. We'll wait to see if that does get confirmed. Potentially positive for the margins, obviously disappointing for those involved. We've also got Vodafone rising on reports that they could be offloading their Italian business. Now, this is a Bloomberg exclusive, does follow attempts by them to sell that business to Iliad over in France just around a year ago. Now, we've got a massive profit warning down the bottom here, down 28%. This is Team 17 out of London. It's a small video game maker. They make games for things like Toy Story and also an action-packed fishing game, according to the report from them. Now, in the statement, they did say that earnings are expected to be ahead of analysts' expectations, but further down on page 2, they note that some games are underperforming at the moment. We're also seeing feed through into some other video game makers, including Embracer, the maker of the Lord of the Rings game over in Stockholm. That one's slipping a bit as well. Not a good day for video games at the moment. We'll flip over and have a look. It was all about Crash Bandicoot when I was younger, not Lord of the Rings. But anyway, BASF, now this is a chemicals company, another deal story, potentially selling one of their big energy exploration units to ADNOC, also a Bloomberg deals report overnight. So that one is gaining, jumping around 2% at the moment. Another potential bidder for that one was Harbour Energy in London, a smaller company, but potentially a rival bidder, unchanged at the moment for them, but one to watch for sure at the moment. Now, we brought up Virgin Money, the worst performing stock on the Stock 600 today, following their weak earnings report yesterday. We had the UK banks in stocks to watch, and there is a lot of negativity given the rates focus on those one. That one declining for a second day. We had E.ON because there's a report that the European Union is spending 584 billion euros on refurbishing the power grid network across the continent. Not seeing much of a stocks reaction, but worth watching that one today. I think a massive number in terms of that spending. In terms of the broker moves, we've got Just Eat Takeaway. Now, they've got a new buy rating over at Shore Capital, who says that there is under-penetration in that market. Older generations, according to them, haven't yet taken on board Just Eat delivery, that kind of thing. They do think you should be buying that one. They have a sell on Deliveroo, who say that the grocery department of that, so online groceries at Deliveroo, not as popular as your takeaways. I think if you go on for groceries on Deliveroo, you're just going to get distracted by McDonald's, aren't you? And buy some of those. In terms of the car makers and car parts, this is a Barclays note. Barclays changing their ratings on a bunch of stocks today. They upgrade Continental and Forvia, the parts makers, but they downgrade Mercedes, saying that that stock is seeing oversupply. Shifting gears on their choices in that one. I stole that from their note, but they are moving a lot of stocks in autos today.
Okay, Joe Easton from our equities team, who's going to be spending his Friday evening eating Mackie D's and playing Crash Bandicoot from the, early 2000 or late 1990s. Thank you, Joe Easton, very much indeed. Let's get a broader view on the equities market, indeed fixed income as well, and the Flow Show with Karen Chadid, Chief Investment Strategist for BlackRock's iShares division in EMEA. We were just reflecting on the fact, before we went to Joe, that we are looking at the best month, arguably, across global stocks. Let's see how it turns out, but potentially the best month in about 3 years. Does the rally have further legs? It's muted today. It's been relatively muted this week because of the Thanksgiving holiday and lower volumes. But does this rally more broadly have legs?
Yeah, thanks, Tom. I mean, maybe less burgers, more ETF flows from me. But if we think about the stock market rally, I think as we look to 2024, two questions. Are investors putting money to work yet on this rally? Does this rally have firepower from the perspective of flows? And then secondly, where do we go in 2024? Is it broad? Is it more granular? For the first point, I think we are starting to see some money put to work, but we're barely scratching the surface because equity flows have picked up in October and November, mostly in areas like tech, but also broad US equity ETF flows. And I have some optimism that this can carry on into year-end. But we still have loads of cash on the sidelines. We're talking about nearly $8 trillion in global money market funds. So I think there's a bigger question on what investors do with that cash as we enter 2024.
Well, as you look at the dynamics around central banks, around inflation, what would your recommendation be? Where are your favored regions as you look to 2024?
Well, I think it's going to have to be at, and that's my second point, it's going to have to be at a more granular level. If we look at our analysis of stock markets over the past 3 years, we have seen a step higher in dispersion. So stock dispersion has shifted higher and is now almost structurally higher than it was in pre-2022. So like thinking about 2021 and also the period of what we call the Great Moderation. Dispersion has now moved higher. And I think this volatility, as macro is not really your friend, speaking of inflation, we still have a pretty volatile path for inflation going forward. As macro is not your friend, you got to get granular. So within that, I think US could look interesting as we think about some of those more quality names, the names that are able to continue to generate high earnings as we enter Q1 2024. Sure, the earnings recession may be over, but we're not in a high earnings environment. So investors will pay for the companies that can generate high earnings. So I think quality factor, I think US stocks, specifically tech. I also think areas where damage is already priced, like in European banks that look cheap. So that's my approach.
Okay, we'll unpack some of those views. When it comes to the US, markets expecting, or at least pricing in, about 100 basis points of cuts, approximately, from the Fed next year.
Yeah.
Part of that is down to expectations that growth will be lower, inflation will be lower, but that growth expectation, how much of that is priced in to earnings expectations at this point? Is that a concern that markets haven't adjusted to that lower growth prognosis?
Sure. So like on the macro level, I think the rate pricing, the market pricing of rate cuts, it has gone a bit too far. So if you think about some of those duration sensitive names in stocks, I would be cautious with these, which is why I like to break up that tech bucket into two, the unprofitable tech and the more profitable quality names. And I think the unprofitable names can go under pressure because of their long duration profile. So that's on the macro rate pricing. But then when you think about that growth inflation mix and what it means for earnings, yes, you have a bit of a tailwind where, because inflation has dropped off quite significantly this year, and my US colleagues are cheering the price of a Thanksgiving meal this year versus last year, much cheaper, great. But yes, that's given a bit of a real income tailwind for some of those consumer sectors. But I think a lot of it is already in the price. We have a high bar for earnings already. Earning expectations have come up quite a bit, which is why you've seen even names that have beat this season that just wrapped up weren't massively rewarded.
And you talk about US tech. And the Magnificent Seven, of course, comes to mind. The Nasdaq 100 is up 47% year to date. I mean, it puts the Stock 600 and the FTSE 100 to absolute shame. And there's a reason for that. The Magnificent Seven is part of that mix. Do you focus your cash flows there, or do you want to diversify beyond the Magnificent Seven?
So this goes back to my barbell of I want to go into the quality parts of the stock market, which keep me analyzing a lot of the US market, even some of the Magnificent Seven and that Nasdaq number. If you look at the earnings, if you look at the valuation picture, they don't look that expensive. Some of those high quality tech names, if you look at, maybe they look expensive on 2023 earnings, but just look at 2-year forward earnings and those numbers start to come down. It doesn't, yes, they've rallied quite a bit, but they don't look expensive. But then on the other side, there's the question of, do I start to turn into the cheap parts of the market, the European beta? And of course, we had the PMIs earlier, and we have the IFO coming out at 9 from Germany. And I'm monitoring whether the data is starting to bottom out. It might be too soon to call it, but I think as we enter 2024, we need to see that data trend really start to come up from the trough before we start to put some money to work in that area.
Well, that's really interesting. We've had a number of guests who come on this week, in the last few weeks, talking about whether or not Germany is starting to bottom, and that is something clearly that people are watching. Karim, Shadid, thank you very much indeed. With the $8 trillion worth of cash that is on the sidelines and how that could be put to play in 2024. Chief Investment Strategist for BlackRock's iShares division in EMEA. Coming up, Barclays shares are trading higher on reports that it is considering slashing costs, potentially up to £1 billion. We're going to have the details next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Some people might say that insurance is a boring business, but is that not the case?
No, I find it very interesting. I mean, you're not doing the same thing all the time. I liked it because it had a balance of doing different things at once.
From New York City, from London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
The feedback has been very positive. I would say when you, after 10 years, 12 years of the previous car, when you present a new one, there is always a little bit of a moment where you need to focus on the new design and on the new features of the car. But as we said, it has so many details. You have to spend a lot of time to read them, to study them. You have to spend time with the car to understand it, because we did the same at home about designing and finding the right thing. So I believe it's not been fully understood. We know that it takes time. It's like a friendship. It's like a love relationship.
I'm curious to get your take on Chinese auto brands now. I mean, EV makers that have become the leading car brands domestically, and they're heading and expanding in Europe as well. Are you seeing that, sort of shift right now, where customers are looking at Chinese auto brands in a much different way?
Effectively, in the niche of the electric market that is increasingly present in Europe, but also in all the world, I believe that China is ready. The car prices are even cheaper than European brands, and therefore the producers of European cars need to pay a lot of attention and put great effort to try to remain in the specific market and stay competitive.
That was Horacio Pagani, the founder and chief designer of Italian supercar manufacturer Pagani, with marketing director Christopher Pagani. They were speaking exclusively to Bloomberg's Yvonne Mann. Now to the banking space, and Barclays shares slightly higher this morning, as reports suggest it is planning to cut its headcount by as much as 2,000 positions. That's according to Reuters. The London-based lender is looking at cutting £1 billion in costs. For more, I am joined by Bloomberg's Jenny Serrain, who leads our coverage of UK and Middle East finance. Jenny, how swingeing could these cuts be? What does it say about Barclays as it tries to rein in costs?
Yeah, I mean, what Reuters reported seems obviously like a big cost-cutting effort. It comes with some job cuts as well. And this has been somewhat well telegraphed by the bank. During their third quarter earnings, they said that they would be taking some structural cost actions here. So not super surprising in that sense, but I do think what investors are really looking for is what happens in February. That's when Barclays has promised that they will give a bigger strategy update and really, unveil what they think will kind of take this bank to the next level.
Yeah, and the stock has been underperforming year to date, so the CEO is clearly under pressure on that front. Is that the key reason for kind of pushing through with these cuts? What else is driving this?
No, I think that is it. I mean, I think investors are really getting impatient with Barclays. They've sent the stock down. I think it's about 25% so far this year, and so they're just wanting to see more of an improvement. Their returns have always been lackluster, and they want to see what CS Venkatakrishnan, their CEO, can really turn around here.
And what else? You flagged the fact that they're going to be giving an update. What are you and the team going to be watching for from that update? What could be in the mix?
I think something bigger on the strategy front is really what investors are keen to hear more about. There's a perennial question at Barclays: should they be a big investment bank? And so I think that's going to be a question that Venkat really has to answer.
And I guess if you're sitting there and you're an employee at Barclays, a key question will be, where do these cuts land? But also, is this it? If this is 2,000 in terms of the headcount costs, do we draw a line under there, or is there potential for more?
So the Reuters report said that those were mostly in the back office. It's hard to know if that's it until we hear more on the strategy front in February. But I think investors are looking for something deeper and bigger here.
Okay, really interesting in terms of how Barclays is adjusting to cost-cutting, the pressure on that stock. Currently down around 11% year-to-date, seeing a bit of a modest pickup in the session today. Jenny Serrain, of course, from our banking team, giving us all the details around Barclays. We'll keep across that story for you. Coming up, Germany will suspend a constitutional limit on borrowing amid the country's budget turmoil. For the fourth year, there's pressure on the coalition over in Germany, and there is pressure on their spending plans. We saw in the most recent quarter, growth contracting 0.1%. We'll get more on that story after the break. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Could face bigger challenges next.
It was going to keep Real World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. We are 30 minutes into the European trading day. Here are your top stories. A 4-day pause in fighting between Israel and Hamas begins. 50 Israeli hostages and 150 Palestinian prisoners are due to be released as part of the deal. Fiscal fiasco. Germany suspends a constitutional limit on borrowing for a 4th year amid the country's budget turmoil. Plus, Barclays reportedly cutting costs by as much as £1 billion with 2,000 jobs on the line. Let's check in on these markets then. Barclays is part of the story for the FTSE 100, a modest lift for that bank on the back of that news around job cuts and cost spending being trimmed. Across your benchmark, you are flat here in Europe after 3 days of gains. Looking for direction, more of the moves coming through on an individual corporate story and in the bond markets as well, with yields up again across the US Treasury curve and here in the UK. Gilts selling off again after the sell-off of yesterday on stronger economic data out of the UK, relatively stronger. The DAX is currently flat. The FTSE 100 is off by 0.3% at 7,462. Across your sectors, let's flip the board and have a look at how things are shaking out this Friday then. It was energy that gained yesterday, and today, as I look at energy, it is flat after the slightly more modest gains at the start of the session. Energy is flat. Industrials gaining 0.2%. Health is up by 0.2. The personal sector is currently flat. Insurance gaining 0.3%. There's some deal making around the chemical space. BASF is one of the leading gainers in the session today. Banks, though, are flat. The auto sector taking a bit of a knock again, down 0.1% after the losses of yesterday as well. One of the biggest losers across your sectors. The losses weren't huge, but it was amongst that list in terms of the downside that came through for that sector. Tech is also off by 0.3%. Yields are up, and that may be part of the story there. Basic resources down 0.4. That's after a little bit of pairing of the gains around the property sector in the session today. Chinese stocks ended lower after the gains of yesterday. That's a bit of a picture across your main 12 sectors here, with the benchmark at 4,458.52. Flat currently, just trying to get an edge in a 4th straight day of gains, but it's looking very uncertain at this point. Germany is part of the story, of course, when it comes to how we're thinking about these markets. We saw the GDP print contracting by 0.1% in the most recent quarter, but it's around the debt and the budget where the concerns are focused. Germany set to suspend then a constitutional limit on new net borrowing for a 4th consecutive year. That's after the government was forced into a radical budget overhaul by a ruling last week from the nation's top court. For more, let's bring in Bloomberg's Western Europe team leader, Zoe Schneeweiss. Zoe, what next then for the German government in this so-called debt break saga?
It's a tricky situation for them. They've now already, as you mentioned, decided to suspend that debt brake for 2023. The issue is doing this for 2024, which technically would be an option, faces a bunch of difficulties. One of them is that you need extenuating circumstances in order to pause the debt brake, and those might not really apply. Germany, while now it's contracting and probably also contracting this quarter, putting it in recession, next year growth is predicted, and inflation, which now has been haunting Germany for such a long time, is also set to return to a normal situation. So the problem is here that if they do in fact say, okay, let's implement this debt brake again for 24, that it's likely to face a challenge in court. And beyond that, the government doesn't really want to do that. We have a very fiscally hawkish finance minister here, Christian Lindner, and that's not the thing he has any appetite for.
Yeah, particularly not now that he has arguably a bit of egg on his face after having to scrap this debt brake again for a fourth straight year. So you talked about the GDP print that came out earlier from Germany. Tie that into the broader picture around Western Europe, the economy that you focus on. How much pressure is coming through as we look into 2024 then, Zoe?
There's the issue here that the economies are facing, not just Germany, but all of them are facing the situation of this record interest rate increases from the ECB, this record aggression in tightening. And that was there to stifle inflation. At the same time, partly it's planned that that will feed through to the economy, and that in turn then dampens inflation. But the problem is that it does then weigh on it quite heavily. And overall, that's the one thing. The ECB now has said they've paused hiking and they will stay higher for longer is the mantra. But if in fact there is a more severe downturn, that might force them to start cutting more quickly. Markets think this will be in April. The ECB so far has said publicly that it's not convinced of this.
Yeah, okay, well, we'll watch the rhetoric and whether or not the pricing pulls that forward from April into earlier in the year, given the softness that's coming through for the economy. Zoe Schneeweiss, with the context and the details, thank you for the update there. Let's get to some of the other top red stories on the Bloomberg terminal this Friday. A mistake by a trader is being blamed for an error which led to a slump in Finnish energy prices. The equivalent of around half of Finland's entire energy consumption was offered for sale at an hourly auction. The faulty trades led to an average price of minus 203 euros per megawatt hour. Staying in the Nordic region, Elon Musk says strikes holding up Tesla's operations in Sweden are, quote, insane. Garbage collectors and electricians are among the groups refusing to do any tasks related to the electric car maker as they take action in support of car workers. Postal staff protests mean that no new Teslas can actually take to the road, with Swedish regulations only allowing license plates to be issued by post. Taiwan's main opposition parties, meanwhile, have launched rival bids for the presidency after the dramatic implosion of an alliance that aimed to unseat the ruling party and install a China-friendly government. Terry Gold, the billionaire founder of Foxconn, withdrew from the race, ending, for now, his years-long pursuit of Taiwan's most powerful job. ADNOC is said to be exploring a potential acquisition of Wintershall D, the European energy explorer backed by BASF. The state-owned Middle Eastern company has been studying a possible bid as it seeks to boost its global footprint. A deal could value the target at more than 10 billion euros. Now, retailers are once again pinning hopes on Black Friday being a big shopping day. This as a GfK survey has found consumer confidence in the UK actually rebounded in November. Its major purchases index jumped 10 points in the biggest increase since just after the first pandemic lockdown. Overall consumer confidence rose 6 points. Let's get more then from Bloomberg Opinion's Andrea Felsted. Andrea, how important is Black Friday really for the retailers this year?
It's going to be very important because, I mean, it always is. This is the start of the Christmas shopping period. But I think there's been various estimates. PwC expects in the UK for spending to be down by about a quarter to £5.6 billion. But
down by a quarter?
Yeah. to this year, because a lot of people aren't shopping Black Friday. Now, other surveys have found that people are going to use Black Friday, but not in a good way. They're going to use it to buy their Christmas gifts. They're going to use it to buy essentials rather than buy things on top. So that means a lot of spending could be pulled forward from Christmas. Now, another survey found that, BCG found that Brits were looking for at least a 30% discount. So you put all that together, we're going to be shopping for bargains this weekend. We may not buy them in the run-up to Christmas at higher prices.
Okay, that's interesting. So even the volumes come in decent, it may just be that we're pulling forward our Christmas shopping. And the cost cuts, I'll get it out there, is what's going to be important for
Exactly, and it's not going to... Once you have discounts for Black Friday, it's very rare they go back to full price. And don't forget, discounts started in October. We had, the Amazon Prime discounts in the US.
Yeah.
You had Target did it. They started earlier and earlier, so you get pulled forward into October. October's the new November.
Yeah.
Then November's Black November. Then you get Black Friday, and then the most lucrative time of the year, when retailers really should be reeling customers in to buy their Christmas gifts, buy their Christmas fashion, they give them discounts. It's just an act of self-sabotage. They've brought it all on themselves.
Self-sabotage. What about online sales? Because that's increasingly important.
It is, but we've had quite a swing back to brick and mortar for the last couple of years. Since we're free from our sweatpants, we all want to go out to stores again. So it's going to be online and it's going to be in stores.
Okay, free from our juicy couture sweatpants. I love this conversation about what's happening in retail. What else? Where have the deals been? Where have they landed? Where are the best deals? If we're going out shopping, what are you looking for?
Okay, so electronics always has good deals. They plan them very much in advance. Now, it's interesting this year because last year we had that mountain of inventory which retailers were looking to shift. The stocks are much tighter this year, but you are going to have pockets. We had a very warm start to the very warm autumn. I reckon there'll be some deals on coats and boots. If you want warm weather stuff, they're probably a bit overstocked on that. Toys, always plenty of deals. There's an awful lot of sequins out there. There are rows and rows of sequin jackets, sequin trousers, sequin dresses. They're making a big bet that we're all going to carry on socialising again and we're all going to want a sequin dress. Now, I'm not so sure that's the right bet because I think with the cost of living, we could see a bit of hospitality spending brought in. Do you really want a full sequin outfit at home? You maybe only buy the sequin sweater or the sequin skirt. I think there will be lots of sequins on those sale rails after
I didn't
Christmas.
know we'd end this conversation. I didn't expect to end this conversation on sequins, Andrea.
But
that's where it is, and I missed that trend, so I'll be getting myself a sequin jacket. Andrea, always
Wait till January.
On the real stage. So wait till January. Jackets, coats, boots, toys, and electronics. So wait for those in terms of the cost cuts coming through, or at least the bargains you might be able to snap out. Bloomberg's always excellent opinion writer, of course, Andrea Felsted with the consumer space. Check out some of her columns online and, of course, on the terminal. Coming up, a 4-day pause in fighting between Israel and Hamas has begun. We're going to get the latest as 50 Israeli hostages and 150 Palestinian prisoners are due to be released. That is next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back. This is Markets Today. We are 44 minutes, almost 45 minutes into your European trading day this Friday. You are seeing a flat European stock 600 with US futures pointing up by the slimmest of margins. Let's get back to the geopolitical story of the moment. A 4-day pause in fighting between Israel and Hamas is now underway. It sets the stage for the exchange of dozens of hostages held by militants in Gaza in return for Palestinians imprisoned by Israel. Joining me now is Mirav Dornstein, who is senior analyst for Israel and Palestine at the International Crisis Group. Mirav, thank you for joining us this morning. How significant is this truce, do you think, at this point?
Well, it's significant in the fact that it will allow a hostage and prisoner release, something that I think both sides really want. It's going to be a very fragile few days. We're going to have to see how things develop, if indeed both sides adhere to the agreement. If so, that could be a successful model for continuing. If not, it could mean a return to combat or something that looks even worse than what we've seen up until now. So we really have to see how things go along. There's already, I think, a lot of movement of Gazans trying to go back up north, an area where the IDF already has substantial control. So we're going to have to see how things pan out. But certainly any pause in fighting right now is necessary for the civilian population in Gaza.
And we've been seeing live pictures of trucks, aid trucks, traveling into Gaza from Egypt. What are we expecting to see in terms of alleviating the humanitarian crisis in Gaza? Will enough aid be able to get through in the next 4 days to make a dent?
Humanitarian aid agencies have already said that it will not be enough. And truly, this is the blockade and the siege before this war and now with this war have created a complete disaster. So it would take many more days of pause. Some have said even a month for people to get the adequate aid and medical attention that they need. So I don't think this is more of a Band-Aid at this point. But again, it will be better than what people have seen up until now over the last month.
And look, you've talked about the uncertainties, and of course we have to watch for how this truce unfolds and if indeed both sides stick to it over the next 4 days. And you touched on what it could mean for the conflict longer term. But to be clear, you don't think this is a step necessarily closer to ending this conflict, or could it be?
Well, that remains to be seen. Israel certainly is determined to resume combat, and the defense minister and the IDF and the political leader, they've all said that this is only a pause and that they are going to resume. Their objective, as opposed to every other Israel-Gaza war in the past, their objective now is to eradicate Hamas. This is a very tall order. This is something that they've repeated will take a long time. So as far as Israel is concerned, this cannot be an end. At the same time, because there are many hostages that Israel would like back, and because the hostage issue has become more of a priority in the last few weeks due to public pressure in Israel, it could be that we could see that this pause could be the model for prolonged or additional pauses. Certainly, Hamas has an interest in elongating and prolonging the pauses so it can regroup. So there are kind of overlapping interests on both sides. to continue the pause or to add additional pauses. However, a cessation of hostilities is not going to be enough. This is what Israel has repeated many, many times. It doesn't feel like that would be enough of a victory, enough of a defeat of Hamas. So I unfortunately think that we're going to see a resumption of hostilities after this.
And talk to us about that changing sentiment on the ground in Israel. How has that adjusted, and how could that play into the political calculus of the government there?
Well, I mean, there really has been a shift in the last couple of weeks. The hostages were kind of an afterthought in the very beginning. And, there's women and children that are set to be freed. And the families of the hostages, once they got over their initial shock, organized a pretty concerted campaign. And the media has definitely been supporting them here. And so you suddenly have seen that the political leadership is actually talking about hostage release as just as important. And I think it's also important to keep in mind that we're almost 50 days into this. And while Israel certainly has listed many of its achievements, it's hard for the Israeli public to see any kind of victory right now. All it sees is continued combat. Obviously on the Gazan, on the side of Gazans, this is a disaster for them. So it's hard for Israel to see a victory narrative. So I think it decided that the best thing it could do at this point is to release hostages and give the Israeli public a little bit of what it really desires. For Israel, no matter how this goes, if you don't return the hostages, there is no victory.
There is a lot of focus, and for the right reasons, on what is happening in Gaza. Are we overlooking what's happening in the West Bank? I know you've written about this, the settler violence. It's something that clearly concerns Israel's US allies as well. What is unfolding there, and how consequential could that be?
Yeah, I'm very happy that you asked that because, while Israel and the world tend to separate between Gaza and the West Bank, what you have essentially is a Palestinian population that want political rights and want self-determination in both Gaza and the West Bank. What's happening in Gaza doesn't end in Gaza. And you mentioned settler violence. That has been an increasingly violent and problematic and destabilizing force. But it's important to remember that settlers that commit violence are small in number, and the ultimate entity responsible is the state of Israel, which and the IDF, which allow them to do this, which do not take them in for prosecution and punishment once they've done this. So this is really something that Israel is responsible for, and it could certainly undermine stability. And Israel continues with its policy of de facto annexation of the West Bank, which is land occupied in a war. This is an international violation of law. So, the West Bank is also very, very fragile, and Palestinians there also deserve to have a cessation of hostilities. But unfortunately, that's not happening.
Meirav Sunshine, Senior Analyst for Israel-Palestine at the International Crisis Group. Thank you very much indeed for the analysis on this truce that is taking place in Gaza and the events, of course, in the West Bank. Thank you. Coming up, concerns over European data is impacting multiple asset classes. The Stock 600s is now down about 0.1%. We'll get more analysis. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
So we get to ride in an Uber with the Uber CEO.
Yeah, that'd be pretty cool.
Come along with me, Emily Chang, as I ask tech leaders of today what makes their businesses future ready for tomorrow.
You're an expert.
This is Markets Today. We are 54 minutes into the European trading day. The European stock 600 benchmark is now down 0.1%. Let's talk about what's happening, though, across these markets with a particular focus on fixed income and sovereign debt. Ven Ram joins us from our M Live team. And Ven, you have often been the cautionary voice in terms of how markets are pricing in cuts, saying, hang on a second, there are concerns. Inflation is stickier than maybe many people think. Don't get ahead of yourself. How are you thinking about the tick up in yields that we've been seeing over the last few days? Given that volumes have been pretty thin, is this another cautionary note for these bond markets?
Morning, Tom. Yes, if you look at what the front-end yields have done in the past, since the summer, we have marched up about 100 basis points higher on the two-year yield, and the two-year yield is refusing to let go of that 5% purge. We've been bobbing around 4.95% thereabouts, but if the markets had any conviction that the Fed is about to pivot, we would see that front end rally a whole lot, and that's not what we are seeing happening. And why is that? Because the labor market isn't yet coming into balance. The economy is in this middling Goldilocks kind of territory, and current indications don't suggest that we are about to see an imminent recession. In fact, all the variables, macroeconomic variables that I'm looking at, are all showing that the economy is pretty resilient. And we have seen that kind of data come through as well with the jobs claims and all that. So, we are going to continue to muddle through this economy and for longer than people think. And that means that the front end rally is not going to happen anytime soon. So it still feels a bit too early to be buying bonds.
The data out of the UK surprised many. We saw gilt yields jumping and gilt selling off yesterday, and yields are up again today, Ven. And I want to quote from Hugh Peel, the chief economist from the Bank of England, talking to the FT, saying, I see more evidence of sort of stubborn high-level rates of inflation or growth that are stronger than we would really see as compatible with price stability and 2% inflation over the medium term. How are you thinking about how the gilt markets are adjusting to potentially stickier inflation and more resilient growth in the UK?
Well, front-end gilts have had a horrible week this week, and that's, I think, a sign of things to come. Because what Pill has said this morning is that he's trying to walk the dog back on his inflation comments earlier this month, where he kind of appeared to sanctify positioning to rate cuts in the middle of next year would be
okay,
good.
Ven, we are having connection problems, but we always appreciate your insight. Ven Ram from our Markets Live team on these gilt markets, on these global bond markets as they readjust to the data and inflation. Remember, you can get up-to-date analysis, of course, and insight from Ven and the rest of the team. Plenty more coming up. This is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A 4-day pause in fighting between Israel and Hamas begins. 50 Israeli hostages and 150 Palestinian prisoners are due to be released, with more aid allowed into Gaza. Germany again suspends a limit on borrowing amid the country's budget turmoil. The country's economy minister calls for radical reform. Plus, Barclays is reportedly cutting costs by as much as £1 billion with 2,000 jobs on the line. So happy Friday, everyone. There's a lot to get through, a lot of news out there, and we have a really packed show. So let's start with the European markets map. Again, a lot of the focus is on some of the economic picture that's darkening. We're also getting some IFO pictures or IFO figures across the board. Now, European shares seem to be wavering. Again, this latest economic data really highlights Germany's struggle to actually recover from an energy-induced downturn last winter, and of course look at the impact of higher borrowing costs. If you look at the stocks Europe 600, pretty much little change, and then treasuries declining after trading resumed following a holiday. So that's the very latest, of course, on some of these figures. The IFO Business Confidence Index, 87.3 instead of the estimated 87.5. Now, shortly, we'll be speaking to Clemens Fust. He's the president of the IFO Institute. A little bit later on in the program, we'll talk budget, we'll talk about the economy and what the fault lines for Germany are. That interview, 9:30 a.m. UK time. Now, switching focus to developments in the Middle East, and a 4-day pause in fighting between Israel and Hamas is underway. Now, it sets the stage for the exchange of dozens of hostages held by militants in Gaza in return for Palestinians imprisoned by Israel. For more, let's get straight to Bloomberg's Sam Dagger. Sam, what's happening on the ground since the truce came into effect, and what can we actually expect?
Thank you, Francine, and good to be with you. Well, the truce seems to be holding so far. We're 5 hours in. The next sort of important thing to look out for is in 4 hours, when we're expecting 13 Israeli hostages held by Hamas, women and children, to be exchanged for 39 prisoners held by Israel, also including women and children and teenagers as young as 14. Obviously, the International Committee of the Red Cross will play a key role in all of this. So far, the truce appears to be holding. Aid has come in through Egypt, food, medicine, fuel, and cooking gas. And we've also seen these incredible images of Palestinians emerging from weeks of hiding, of sheltering, under Israeli bombardment. They're out on the streets, they're looking bedraggled, tired, they're moving around with their meager belongings. Some of them have tried to go back to the north from where Israel had ordered them to evacuate at the beginning of this military operation. But the Israeli army has said nobody should come back north. In fact, it wants to make sure that whoever's left in the north leaves, particularly the wounded at the hospitals. I mean, the situation is dire. I mean, the health authorities in Gaza, the ministry, which is controlled by Hamas, says now the death toll is over 15,000 since October 7th. The wounded, we're talking in the tens of thousands. And the United Nations and Arab states have come out this last night and this morning calling for a permanent ceasefire. They're putting pressure on their Western allies. We had Saudi officials speak to their counterparts in the UK and the US in the past few hours. And then we also have some strong statements from the United Nations. We have the Commissioner General of UNRWA, which is the UN agency, and I'm reading here, responsible for Palestinians in Gaza. He was there last night, and he said, and I quote here, "People are exhausted and are losing hope in humanity. They need respite. They deserve to sleep without being anxious about whether they'll make it through the night." End of quote.
Thank you so much, Sam, for the update. Of course, we continue following, and our heart goes out to everyone on the ground. Sam Dagger there with the very latest from Hamas Israel. Now, Germany's economy contracted 0.1% in the 3 months to September as the country languishes in what the Bundesbank reckons may be a recession. It comes as Europe's largest economy is set to suspend its borrowing limit for a fourth consecutive year. Joining us now is Paul Donovan, Global Chief Economist at UBS, and Bloomberg's Noor Al-Ali. So thank you both for joining us. Paul, how worried are you about the German economy? And good morning.
Good morning, Fran. Well, I think the German economy is suffering, obviously, from being more dependent on energy coming out of Russia. That's been its first negative. But also the global consumer switch that we've been seeing, where consumers, having had this phenomenal boom in demand for durable goods back in 2021, they've switched to spending on having fun, tourism and Beyonce concert tickets and all that sort of thing. And of course, Germany's exports are, shall we say, biased more towards the goods than the fun side of that equation. So that shift in consumer spending is also something that has a bit of a bearing here. I think it is also important to remember, though, when we get worked up about, is growth negative for 2 quarters, Germany has a falling population. That means that it is more prone to have episodes of negative growth without a fall in living standards. So we do need to put in perspective the demographic issue that Germany is experiencing. And that means, I think, that while Germany is in a weak position, it is not in a dire position.
Noor?
Look, I agree with Paul, right? We had PMI's data that came out yesterday that showed the downturn easing in November. Now, obviously, those PMI figures were still in contractionary territory. We still have that inflation problem. They're in a very much stagflationary environment. But it's not just Germany, it's the euro area as a whole. And it's something that the ECB has to deal with. Policymakers are pushing back on those very dovish bets from money markets, expecting those central banks to cut rates as soon as next year, whereas policymakers are still holding on to that 2% inflation target. And so with those dynamics, I find that volatility in the bond market is still very much going to persist into next year.
Paul, when are you expecting the first cuts from the ECB, but also from the Fed?
So I think the Fed and ECB will be fighting it out as to which gets in first in the late second quarter of next year. I think the Bank of England will actually be the first to cut rates. The Bank of England has an advantage that it's run by a qualified economist and somebody who's prepared to look forwards. I think the problem, and it's frankly a big problem with both the ECB and the Fed, is they keep saying, well, we're data dependent. And the trouble is, as we all know, economic data has become steadily less reliable. in recent years. And so you can very easily get a rogue number, and that could delay the rate cut from ECB or the Fed, and then the following month the number is corrected and the central bank ends up looking foolish.
When you look at some of, I guess, the dynamics going forward, Paul, what's the biggest mistake that we could do here in Europe? I know there's different economies, and they're quite eclectic, and they're difficult to deal with because of the different dynamics. But what does a mistake from the European Central Bank look like now?
Well, I think a concern for me would be that the ECB remains as backward-looking as it is. The whole point about a properly run central bank is you're forwards-looking. You're saying, okay, yes, inflation is above target now, but we know monetary policy operates with long lags. And where is inflation going? And when we look at the composition of inflation, the durable goods price inflation, the transitory inflation of 21, that's long over. There's energy prices, which the ECB can't do anything about. And then we've got the profit-led inflation, which is really now starting to be squeezed. We're seeing pressure on margins. That profit expansion is coming under attack from consumers who are just not willing to accept it. So when you add that together, I think the momentum of inflation continues to be downwards. Won't necessarily be a smooth trajectory, but the direction of travel seems clear. And I think if the ECB ignores that and keeps looking in the rear-view mirror, then it's going to keep interest rates too high for too long.
And nor could that also, of course, lead to even more volatility as markets price in something and then have to walk it back?
Absolutely, right? You have seen that push and pull, not just with central bank governors or central bank policymakers, but also with governments that have been issuing, the question of supply, bond vigilantes, all these themes I think will continue and persist in 2024. We had the debt brake news come out yesterday out of Germany. And really, we've come, last year we've had a lot of these instances where the market has really pushed back on those plans of fiscal spending from governments, whereas the monetary policy aspect of things is really focused on, as Paul says, that inflationary and backward-looking view. Now, yes, inflation has been easing, but you do find that there is some persistence in it that is quite concerning for central bankers, particularly as they've waged the most aggressive tightening cycle that we've seen in decades. And so to walk back on that so soon might seem rather, unpriced or mispriced for those policymakers. And so they want to make sure that inflation is completely in the rear-view mirror before they have to go on and look at things like financial stability, which is very much an important mandate for them. And we've seen them react, whether the Bank of England or the Fed. We have seen them react from the SVB to the LDI fallout that we had last year. So I do find that central banks are still in a very tricky situation. They're not responding to, and they're not here to close out spreads, right? As that famous line that we've had from the ECB, they're here to make sure that their mandates are fulfilled, and that's the inflation and the financial stability target, and that's going to continue to be a theme into next year as the market fights back on that.
Nora, thank you so much, Nora Al-Ali, and we'll be back with Paul Donovan, Global Chief Economist at UBS. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
this be the last of its kind? No, this is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome back. Let's talk banks and let's turn to Barclays. A Reuters report saying the bank is working on a cost-cutting plan of up to £1 billion. Now, an estimated 2,000 jobs could be on the line. For more, let's get straight to Bloomberg's Tom Metcalf, who oversees all of our finance coverage in Europe. So, Tom, what do we know exactly about the proposals, and actually, is that a surprise?
Yeah, some interesting specifics. So in terms of those, they're looking at cutting about £1 billion of costs over the next several years. This is according to Reuters. And as part of that, they would say as many as 2,000 jobs would go in basically Barclays' back office. I would say this is kind of being well flagged, not hugely surprising. You can kind of see that in the share price today, which has barely budged.
So what more can they actually do?
Well, I think that's the interesting thing here is this is sort of almost like a placeholder, right? We're all waiting for this big investor event in February around full-year results. We're expecting, a much bigger overhaul. So for me, that's the kind of key question is how much further can, the CEO and Barclays management team go? This is their first, sort of offer, I suppose, and it looks like they need to do a lot more.
Tom, thank you so much. As always, Tom Metcalf there, overseeing all of our finance coverage across Europe. Now, still with us, Paul Donovan, Global Chief Economist at UBS. Paul, again, away from the banks, this is a story of interest rates. What are you expecting the Fed to do? When you look at consumption, it seems to be holding okay, but there's this 6-month weirdness where every 6 months it feels like we're expecting a downturn. The consumer holds on and markets reprice what the Fed does.
So I think on the consumer story, what the market periodically misses is the fact that the middle income consumer is actually in a relatively good place overall. And that's what is softening the nature of the slowdown. Now, I think there is a slowdown. It's a softish landing next year, but that implies there is some kind of landing. Unfortunately, lower income groups are not in such a good place. They have run out of the post-pandemic era savings. They are more reliant on credit in order to survive. They're facing higher rents and so on. But the fact is, if you're a middle-income household in the United States today and you own your own home, that's the critical caveat, unless you live in Florida, your inflation rate is somewhere between 1% and 2%. And so your real spending power, your ability to consume is better than the headline numbers suggest. And that's been the thing which has been, I think, deceiving the markets a bit. But the key point here is that the inflation reality is lower. And so that means that the consumer is that bit more resilient.
But how long can that stay, Paul? Is there going to be a big downturn, or do you think the consumer continues spending, muddling through?
So I think there's going to be a slowdown. We are in a situation where for 2023, the consumer has been very much reducing their savings rate. So they haven't necessarily been dipping into the money in the bank. But what they've been saying is, well, we've got money in the bank, so we don't need to save $500 a month. Let's save $300 a month and therefore spend the other $200. And that's been going on, and the savings rate has come down. Now, that can't carry on indefinitely, and we're probably coming to the limit right about now. So what that means is we need to see real wage growth come in to support the consumer. And for the first time since the pandemic, we are finally seeing some real wage growth. So that doesn't give you a collapse. It doesn't give you a slump. But the fact that you're running out of the ability to keep reducing your savings rate, that's probably going to push us below trend growth. So I think that's what we've got to think about next year. It's a below trend growth environment, but it's not desperately below trend. We're not in recession or a deep slowdown or anything like that.
Paul, is there something that, we talk a lot about productivity. We had also the autumn statement here in the UK 2 days ago. Like, what would your template be for the UK to grow? I know you were talking about the Bank of England, the fact that they have adults in the room, and maybe, they'll be upfront and cut when they need to compared to some of the other central banks.
Yes, so I think that the situation in the UK, of course, is that we have ongoing fiscal tightening. And actually, we have quite significant fiscal tightening as we go into next year. So that's obviously a fairly strong headwind to economic activity. The other thing we've got to be very much aware with, I think, with the Bank of England and the UK economy is that because of the structure of the UK, because it's an economy that sort of has embraced flexible working, it's embraced online retail and so on, there's enormous change going on in the economy. And we know the data doesn't capture this. So just a couple of months ago, the Office of National Statistics completely changed the narrative in the UK, said, no, actually, it wasn't a weak post-pandemic recovery. We're actually doing pretty well by the standards of the G7. And they did that just by discovering growth that had previously been missing because the structural changes were disguising it. So we've got to be a little bit careful in assuming how bad things are going to be next year. But with the fiscal tightening and remember, of course, the ongoing higher interest rate saga, that is going to be a constraint. And that's why I think the bank is going to move to ease back a bit second quarter next year.
Paul, thank you so much. Paul Donovan, their global chief economist at UBS. We'll have plenty more on this throughout the day. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Now it's a week to go until COP28 kicks off in Dubai. The UN body tasked with setting up a new carbon crediting mechanism will present crucial guidance to the conference. If agreed, it would become operational next year. Now we're joined by Stafford Capital partner Angus Whiteley. Angus, thank you for joining us. I mean, there's a lot of concerns. Some of the voluntary carbon, putting out there, like the figures were not harmonious in different countries, and they just didn't really achieve what we wanted them to. What's the way forward?
Firstly, thank you for having me, Francine. And I think it's worth just sharing some context for that question and where we're coming from. If we look at what's happened in 2023, we have had earlier in March this year, we had the IPCC sixth assessment report. We've had temperatures through the course of the summer which have been global records of extreme temperatures, and that's continued as we've had the International Energy Agency coming out with a report in September about the energy pathway to 2050, and we've had most recently in the US the fifth national climate assessment. So all of the evidence that's in place now is that we need to be acting much quicker than we have been, and we then need to look at the tools that are going to enable us to act. Your question about the carbon market and the nature of the voluntary carbon market is one in which yes, we have.
But it's just not working. I mean, A, can it be rescued? And two, what's the way forward? Does it actually have to be not voluntary? Do you have to have regulation around it?
Well, look, we have a mix of different markets at the moment. We have voluntary and we have regulated markets. And ultimately, I think where we need to get to is to the position where globally we have a carbon price. And I think the challenge for reaching that point is that we need harmonization and collaboration across the world. And that, in today's world, is looking like a very hard pathway. So we have regulated markets in certain places, we have voluntary markets in certain places, and we have that context which I've explained, which is putting an ever-increasing pressure to come up with a solution to the carbon price and the carbon challenge. So I think there's pressure there. We need collaboration amongst countries. And I think that is something that everyone coming together at COP presents the opportunity for people to talk. So
you don't think regulation should actually look at this? I mean, it'd certainly be more decisive and with more teeth.
Look, I think what needs to happen is that this needs to happen on a global basis. So yes, we can have local markets and local regulators making change, and that's a good thing. But I think what we need to see is the harmony across the group.
Angus, thank you so much. Stafford Capital partner, Chief Executive Angus Whiteley. We'll be back with more.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
A four-day pause in fighting between Israel and Hamas begins. 50 Israeli hostages and 150 Palestinian prisoners are due to be released, with more aid allowed into Gaza. Germany again suspends a limit on borrowing amid the country's budget turmoil, while the country's economy minister calls for radical reform. Plus, Barclays is reportedly cutting costs by as much as £1 billion, with 2,000 jobs on the line. Well, good morning, everyone. Welcome to The Pulse. I'm Francine Lacqua here in London. So we were talking about the carbon credit market. Let's continue that discussion, which, of course, will be one of the focuses on the upcoming climate talks in Dubai. Still with us, Stafford Capital Partner, Chief Executive Officer Angus Whiteley. Angus, we were talking a little bit, of course, about the carbon markets, and I think the overarching question is, do we just need to cut economic activity instead of paying to make up for it with carbon credits?
So let me see. I think that we clearly we cannot make up for it by issuing carbon credits. I think that we need to be reducing real-world emissions, and we need to do that in a way that reducing economic activity, I don't think is the answer. I don't think that that's the way we're built. I don't think that's the way we're set up. I think it's a question of addressing how these emissions are produced and what it is we do and how we do it. So, we've seen, I've mentioned earlier that we've had the reports coming out about the challenges that we face. But I think there is cause for optimism for what has been coming out through these reports and to say, actually, what we've been doing well. So if you look at the electrification of, let's say, transport, for example, I think there's been huge praise as to the progress that's been made in that. And this is part of the solution. I think what we've seen is, let's say, recognition that the technologies that can address the challenge are now, I think it wasn't long ago where we were saying we need to develop technologies. Well, a lot of technologies have been developed, and it's a question now of implementing them.
So what is your big expectation for COP28? What are you hoping, will happen for carbon credits?
Yeah, so look, expectations and hopes. I mentioned earlier that bringing together, let's say, a greater alignment, the working towards a carbon price that can be established. I think if you look at the way the world is operating now, we're getting multiple different indicators of what the price of carbon can be, there needs to be harmonization, there needs to be greater alignment, and I think that's really what I'm hoping that we can we can take some steps down that pathway, and we can take them quickly.
I mean, companies such as airlines have been found out to greenwashing, claiming some of the credits have rendered their products and services carbon neutral or even negative. How do you push back against greenwashing now? Like, again, how do you make sure that no longer this happens?
Well, I think, let's consider the challenge. The environmental challenge is huge. There is a financial reality to it. And then there's a broader position of encouraging change. I don't think the way of bringing about positive change is to go about looking at let's say, addressing issues. Greenwashing is something that I'm very worried about, because I think it allows the naysayers to stop, to not do anything, and we can't have that. So yes, we don't want greenwashing, of course we don't. We want encouragement, we want support, and we need positive change. So let's make this a more positive, hopeful discussion rather than, let's say, giving greater justification for not doing things.
Thank you so much, Angus Whiteley. They're a Stafford Capital Partner, Chief Executive Officer. Now, Germany's business outlook has improved for the third month in a row on hopes of an economic recovery. The IFO Institute's Expectations Index hit a 6-month high of 85.2 in November. Joining us now from Munich is Clemens Fuest. He's the president of the IFO Institute. Mr. Fuest, as always, thank you so much for giving us a little bit of your daily schedule. How worried are you about the German economy right now, given the latest figures?
Well, I think we are getting positive signs from the incoming data, so it's probably too early to say it's the recovery, but it's a stabilization. So the economy is going from contracting to something like stagnating. Of course, there's a lot of uncertainty now created by the budget chaos, and we'll have to wait and see how the government handles this. But this is the big question mark, I would say, over the recovery.
Mr. Fuest, is Germany in a recession? And if so, when will it end?
I think currently our view is that the German economy is rather stagnating or stabilizing, so I wouldn't call it a recession at the moment. We think the economy is stagnating or even growing slightly, but there is, of course, uncertainty for the next year. We were expecting recovery next year driven by falling inflation rates, maybe falling interest rates, or the expectation that interest rates may fall in the second half of the year, growing incomes. But now, of course, we have this risk of the budgetary situation, so that creates uncertainty.
But do you think we're past the worst of the downturn?
We are probably past the worst of the downturn because we think the economy will start growing slowly. But as I said, there's now this renewed risk, so we'll have to see how that plays out. I mean, if there were massive cuts or tax increases, the economy would be likely, yes, to fall into a recession, but I would expect the German government to manage this differently so that that can be avoided.
When you look at, I guess the mess of the budget mess right now in Berlin, what's your baseline impact that has on growth? And again, if there's a worst case scenario about the impasse, what does that look like?
So the worst case scenario would be that the budget hole of 35 billion is filled by spending cuts and tax increases. That would be that would have a very negative impact on growth. It could put Germany back into recession in the coming year. But it's not my main scenario. My main scenario would be that the government manages to find other solutions so that, yes, there is uncertainty, which will dampen growth a little bit. But I think we will see growth, albeit rather weak growth, something between maybe 0.5% and 1%. That would be my main scenario.
Mr. Fuest, can Germany actually implement some of the necessary changes to the economy without this, special money from off-budget funds that were now found to be in violation of the Constitution?
Well, I think the government could review the subsidies it plans. It could increase, for instance, the CO2 price a little, but it's impossible, in my view, to come up with all the necessary finding just through cuts and tax increases. So we do need deficit financing to finance the investment needs in infrastructure in the energy transition. And the question is, how can that be achieved? One way is to use public companies to incur debt. That would be legal. But the better approach would be to try and set up a new fund and anchor it in the Constitution. So that would require cooperation with the opposition, with the Conservative Party. Such a consensus was found for the Fund for the Armed Forces that was introduced after the Russian attack on Ukraine. And I think that should be repeated now for the energy transition and for infrastructure. Will the opposition agree? Certainly not in the short term, but maybe after negotiations.
Very interesting. Mr. Fuest, as always, thanks so much for joining us. Clemens Fuest, there, the president of the IFO Institute. Extremely important given the last couple of weeks on Germany. Now, coming up, Slovenia agrees an extra levy on banks and businesses to fund the recovery from last year's devastating floods. Our interview with the Slovenian finance minister is next, and this is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Some people might say that insurance is a boring business, but is that not the case?
No, I find it very interesting. I mean, you're not doing the same thing all the time. I liked it because it had a balance of doing different things at once.
Now, Slovenia's government has approved a tax on banks and higher levies on companies to fund reconstruction following severe floods in August. At least 7 people died in the country's worst natural disaster in 3 decades, while businesses, homes, and infrastructure were also destroyed. Well, we're very pleased to be joined now by the Slovenian Finance Minister, Klemen Boštjančič. Mr. Minister, thank you so much for joining us. First of all, can you talk to us a little bit about some of these efforts really to reform the plans of the government through extra tax? What does that look like for businesses?
Yes, Slovenia, this year in August, the biggest natural disaster in our history happened. The consequences are severe. So just in direct cost of the floods is measured around 3 billion euros, while together with the indirect cost, this will be close to 10 billion. So it's something, I'm talking about 5% of our GDP to 15% of our GDP. After the floods, the government reacted immediately, meaning we're just actually we're in the middle of preparing the budget for 2024. So we immediately changed our priorities. Basically, financing the costs became the first priority, and of course, so one of the part of our work was also to try to find certain revenues, which will help to find these sources. And after quite long debate with the different institutions, we decided for those 2 taxes, as you mentioned, it's additional.
Minister, the taxes were criticized, okay, but by a lot of the people that are being taxed on. Do you worry that this will have a backlash effect, that actually it will hurt the economy as there's less investment in the country, or businesses feel like they need to spend less?
Well, new taxes are always criticized, but no, the answer is no, because we took a lot of effort, made a lot of analysis, which kind of a tax would have as small as possible effect in this regard, as you spoke. So that's why we decided for an temporary additional 3 percentage points of corporate tax and tax on the bank assets, which, on the other hand, just to explain, in 5 years, we predict that from this tax, bank assets tax, we will have a little bit less than $500 million, while only the profits of the banks this year in Slovenia will be above 1 billion, which mostly contributes to the difference between active and passive interest rates, which is, of course, the case all over Europe.
Minister, the EU is also trying to push through a Ukraine aid program. What's Slovenia's position on this?
Slovenia has been one of the most vocal supporters of Ukraine since the beginning of war. Also, in the terms of funds, monetary and other help to Ukraine, we are among the top countries measured by per capita or per GDP in the help of Ukraine, and we intend to support Ukraine in the future. Regarding new financial instrument that European Commission is introducing now, we support it. We believe it's necessary because it's an instrument which will somehow give an answer to changing short-term recovery needs and mid-term modernization needs of Ukraine, and while on the other hand, which is very important, which this instrument we believe will bring additional transparency and predictability regarding the funds needed.
But Minister, so what happens, would you be supporting an alternative aid program if Hungary actually vetoes a program for 50 billion?
Yes.
100%? No,
from what is known by now, this is quite in line with our views and the way how Ukraine should be helped.
Minister, how much do you worry about fiscal indiscipline and growing debt in some of the largest countries in the EU?
Very much. I mean, after 4 years of escape clause, which means that the fiscal rules would put on hold after the pandemics and energy crisis, of course, and a lot of helicopter money distributed in Europe, the governments, the ministries, the people got used to it. And so it's very difficult now to change it back to the situation we were before 2020. But it's clear that it's the end of this escape clause, so the new fiscal rules should be back. In the case of our country, we have written the fiscal rules in our constitution, but of course these are the old fiscal rules which don't answer to the current situation anymore.
But so, Minister, so what are some of the proposals on the table, and actually which proposal do you think has the best chance of being agreed on?
Currently, we are talking regarding first special deficit safeguard, which will somehow require from the member states to bring the deficits well below 3% threshold. The second one is the debt reduction safeguard, which is being kind of written in a new way. The third thing, which is very important, is regarding the debt sustainability analysis, which is probably a new working team will be formulated to additionally analyze this procedure, which is, in simple terms, a complex system which gives the results very different from one country to another. What should the goals of the countries be? Fourthly, most probably the defense expenditures will have a special status regarding a potential opening of excessive deficit procedures. So these are the basic questions.
And do you think there's enough agreement to actually find a consensus and sign off?
First of all, I'm quite sad that a lot of valuable time was wasted during last years and months. And I was very vocal also in last year at the ECOFIN meetings regarding this. On the other hand, the Spanish presidency, especially Minister Calvino, is really trying to find a consensus. So I really appreciate all the efforts they're doing. Of course, there are big differences in views of the countries, but on the other hand, all the ministers of finance agree that we have to find a compromise to a sustainable finance in Europe. So although it still seems difficult, I have no doubt that there will be a compromise in the next few weeks or months.
Minister, we were talking about the floods, and of course that means that because of your budget, you're not in line with the fiscal rules and you've been granted an extension. Are you confident that you will meet that extension, or do you worry that some of the reconstruction plans will cost more than expected?
Like I said, the priorities of the government, of course, shifted because of the floods. Our goal, and we've been very clear about it, our goal is to try to reconstruct all the areas as soon as possible. We don't want to go into the position where the restructuring will take 30 years, which was the case in a lot of natural disasters. On the other hand, the discussions with the Commission regarding the so-called one-off effects of these floods were successful till now. Just this week, a couple of days ago, the Commission introduced their statement on the draft budgetary plans of member states, and Slovenia is among 7 countries of Euro area where the Commission agrees that our budget for 2024 is in line with the recommendations of the Commission.
Minister, you also planned, I think, to issue some bonds in China and Japan, and I think it was meant to be in the autumn. We haven't had that yet. Is it postponed or cancelled?
No, I believe that our treasury is the best in Central and Eastern Europe, very professional. And basically also the question of issuing a bond in Japan is still very alive. Most probably we will issue it next year. The reason why we haven't done it this year as we thought a year ago is basically mostly because of a very good liquidity and cash position we have today. And secondly, we try to bring the deficit at the end of the year below the 70% of the GDP. So that's why we decided to move it to next year. We are still not, we haven't decided regarding China, but we are exploring this market as well. But all this is just, we want to explore all the possibilities and to be prepared if any other new financial crisis arises. And I think that's why it's important to distribute the risks.
Minister, thank you so much for joining us today. That was the Slovenian Finance Minister, Klemen Boštjančič, joining us here in the studio. Coming up, retailers get ready for Black Friday with big discounts. Will consumers spend big or stay at home? We have all of the deals and the trends and the details next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue. Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
So it's Black Friday on what retailers hope will be a big shopping day. A GfK survey has found that consumer confidence in the UK actually rebounded in November. Let's get more now from Bloomberg Opinion's Andrea Felstedt, who of course covers retail and luxury very, very closely. Andrea, so good to see you. So how important is Black Friday to retailers this year?
It's going to be very important. I mean, it's always important. Now, I think it's going to be very mixed. PwC actually thinks spending will be down this year in the UK, £5.6 billion compared to £7.1 billion last year. I think consumers will shop, but I think they may shop in a different way. Other surveys have found that consumers will shop, but they're going to look for gifts. They're going to look for essentials. They're really going to sort of stock up to do their Christmas shopping, or maybe buy things they would have bought anyway for a cheaper price.
So what are we expecting from online sales? They feel, wider and deeper than usual.
Well, I think, online has suffered, so you may see some more online deals. I think the deals generally, this time last year, everybody, the UK, Europe, US, had this mountain of inventory that they were trying to work through. So I think that has been largely worked through, but there are pockets of probably oversupply. So if you're in the market for a coat or boots, we've had a warm autumn, that's pretty good. Fashion, I think, will be very mixed. There's an awful lot of sequins around. I'm not sure people will buy that many sequins. Could see some deals there. Electronics as well. We could see some deals.
Okay, interesting. Andrea, thank you so much. As always, Andrea Felstedt there from Bloomberg Opinion. You should definitely check out everything that Andrea writes. It's always interesting and a little bit different, too. Now, this is a picture across the board. You look at markets. A lot of the focus is not only on inflation, but it is on the German economy. Now, we had a great conversation with Clemens Fust, of course, of IFO. European shares wavering after the latest economic data highlighted Germany's struggling to recover from an energy-induced downturn last winter and the impact of higher borrowing costs. We'll have plenty more markets next. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The first truce in the Israel-Hamas war has begun. 50 Israeli hostages and 150 Palestinian prisoners are due to be released. Barclays is reportedly cutting costs by as much as £1 billion, with 2,000 jobs on the line. And it's Black Friday. The holiday shopping season is underway as deal seekers face economic pressures. A very good morning. I'll be knocking on the doors of Saks of Fifth Avenue shortly after this show. I'll be with the queue. So what is the number that you need to focus on? You got a little bit of green on the screen this morning, but global equities have risen by 8.6%. That is the number. You've had the best run up this month in 3 years on global equities. Now, you're just seeing these equity markets rise despite the rise in yields. Danny will take you through that in a moment. What is the flow telling you? The biggest two-week inflows into equity since February 2022, and who got the biggest peaks of the pie? U.S. equities took in $16.5 billion. So you are just seeing the flow show shift as well. It was the sixth week of flow into the U.S. Nearly $13.9 billion went into the U.S. complex. European stocks today just eking out the ever smallest of gains. You've had the German IFO index. That outlook reaches a 6-month high. The economy contracts. Consumer spending has dipped. Take a look at BASF at the bottom of your screen. A potential bid out there from ADNOC going for one of their subsidiaries. Wintershall Dea. We'll keep an eye on that stock. Danny, good morning. These bonds, it's amazing. The tail that wagged the dog. It's your side of the pond that did it.
It is, because, I mean, you were just talking about a German story there. It is the German story that's having these global bond markets on edge when we're back finally to cash equity trading. The German government is looking at suspending its debt limit for a fourth consecutive year. It is adding to the global pressure over concerns of the fragility of fiscal governments at this moment. So those concerns in Germany, it makes German yields push higher. 10-year yields in the U.S. are up nearly 7 basis points. Japan also seeing JGBs move higher too. The yields there, 5 basis points. We got inflation in coming at 2.9%. Yet again, we have exceeded the BOJ's target of 2%. This is the 19th consecutive month that's happened. Will they finally move to normalized policy if we're near 3% in inflation? Finally, Manus, Brent crude just ticking higher, but mostly holding on to the losses that we've seen this week since that OPEC Plus meeting was delayed. It's no longer in person. It's going to be be online on November 30th. Will Manus then be denied his Viennese Christmas markets? That's the real story here. Manus, one of the other stories, now that, you know, we're getting up in the run to Christmas, it's all about Thanksgiving and the malaise that markets have seen around Thanksgiving. I think everyone's kind of hopped up. What's that thing called? Tryptophan? Is that what it is when you eat a lot of turkey and get really tired? That's what this market is like. The VIX index, Manus, yesterday and earlier this week hit its lowest level since before COVID.
And that is, you know, perhaps the biggest of all. I didn't actually have turkey, just to let you know. I had a little bit. Yeah, my entire Thanksgiving
Your first
trip.
American Thanksgiving.
Well, you know, I had the Irish version of Thanksgiving, which was a little bit of steak and some good food and apple pie. But on the volatility front, let's just put it in context, because that level of repressed volatility, Danny, is interesting, because you're seeing some pretty big trades actually go through. The 18 calls traded in size just the other day. There's speculation, a lot of speculation in the market that perhaps 50 Cent is back, or that's the person who had the monster VIX trade 6 years ago and made a lot of money. Perhaps there's a 50 Cent style trader back in the market. But Danny, we've got our very own 50 Cent trader in the house today. Good morning.
That is, I love that. We should think of his own rapper nickname. It's Jupiter CEO Matthew Beasley. But he did issue a warning to investors as we look ahead to 2024. He says soft landings are rare. Housing is a slow-moving asset that could still crack. Be vigilant for signs of a harder landing than is currently being priced into asset management. Matthew, thanks for joining us. I'm sure you've never had anyone try to come up with a rapper nickname for you. So here's the first here on Bloomberg Brief. But look, this idea, soft landings are rare. If they're rare, what is your base case for 2024?
Well, I think the base case is it's just incredibly hard to predict given where we are in markets. I find your comments at the top of the hour really interesting about how markets have been driven by flow in the last 2 or 3 weeks. Indeed, I saw some research this morning that suggests that here in Europe, we've seen the largest re-leveraging in the long-short world in the last 13 years, which to some degree absolutely explains the movement that we've seen in equity markets recently. I think that's a really important point as we look forward into next year, because look, the hard landing, soft landing debate is not going to be resolved anytime soon, but money flow is going to be vitally important in driving markets from here. And I think actually there's multiple scenarios that just see money moving into markets regardless, given what is on the sidelines right now.
Well, that begs the question then, have you seen... Good morning, Matthew. Welcome to the show. Good to see you back in the seat. Have you seen some kind of demonstrable shift in pro-risk activity then from clients? Did somebody switch on the risk light bulb then post-CPI, given what you're saying about the flow show?
No, but I think that might change soon. And the reason I think that is because typically when you start to have visibility on the top of a rate cycle, that's when clients start to think more about being slightly more risk hungry, to start to think about investing more. And look, we know whether in the fixed income world, where we look at large institutional pools of money here, not just in Europe, but across the world, but also in the equities world, we know that money has been sitting on the sidelines, and we've seen the effect that that money moving can have on markets in the last 2 or 3 weeks. That could absolutely continue to drive markets as we look forward to next year, if market participants start to believe that we are nearing the top, or at least they can see the top of the rate cycle.
That's interesting that your clients have yet to do that, because there had been a lot of commentary that the pace of flows so far is post-CPI. Manus pointed out, again, as you say at the top of the show, the most since over a year at this point, that it verged on frenzy, that it verged on speculation. When you see flows at that pace, do you look at it and say, maybe this is speculation, maybe this isn't sustainable?
Yeah, I would probably distinguish between what I describe as faster money and slower moving money. So I guess there's a difference between investing and trading to some extent, and I think you've absolutely seen trading money return to the markets. I think investors who probably have longer-term timelines are being a little bit more thoughtful.
Does that trading money come out then?
Well, I think that trading money probably is in the market. And as you say, given where we are in the year with Thanksgiving and then into December, markets volumes tend to become a little bit more languid. But I think people, of course, it's that calendar year effect, are starting to look forward and think about next year. And next year they see likely rates not rising as much, if at all. And there's a lot of money sitting on the sidelines. And I think actually in the equity world, the thing to be really conscious of as we go into next year is just how much private equity money there is that has been allocated to private equity firms that has not been invested this year. and the pressures to be investing or to start to think about investing, and then the momentum that that creates as other people get chased into the market, that could be quite considerable into 2024.
So 2024, if you take that scenario, private equity's got money. There's $8 trillion sitting in money market funds. I got my hands up for that, which is I'm risk averse. Why not have 5%? Given that scenario that you've just outlined, these markets then could push considerably higher on the equity front, even without a 200 basis point cut, as State Street said to Danny and I last week. I mean, is the pro-risk stance predicated and stands up even without 150, 200 basis points of cuts, Matthew?
Yes, I think so. And I think when I think of the parameters of how markets might play out in the next 12 months or so, let's just think about extremes of the soft landing, the hard landing, and something in between. I think given where valuations are, given how the economic outlook is starting to trend, both not just in the US, but across other geographies, notably across emerging markets as well, I think the balance of probability leads probably to a more risk-on environment. And I think nuance is going to be incredibly important next year. To be bullish on equities, I think, is hard, given some of the valuation disparities you see across emerging markets and developed markets, and indeed even within certain markets, and likewise within fixed income. I mean, what's so interesting, you showed a chart of the VIX, which of course is a headline measure of volatility. What's so interesting is within asset classes, you are starting to see more volatility. You're starting to see correlations decrease. You're starting to see dispersion of returns increase. These are all typically great signs for active money managers. And I'm aware I might be talking my own book here as the CEO of an active management company.
Shameless plug.
But it's been a torrid environment. Well, yes, but it's been a torrid environment for the active management industry because clients have been sitting on their hands and they haven't believed in direction.
Matthew, what I love is you might be a CEO, but you are still a stock guy at heart. You're still
it never leaves you.
Exactly, as I can imagine. But I mean, this was supposed to be a year that was good for stock picking because you had a new paradigm in rates. You had a shakeup, but instead what you saw was the Magnificent Seven lead. You saw big cap tech stocks. You saw AI really carry this market. Are you more confident, not just that the market gains next year, but it's not just going to be tech, that it'll be a broader gain?
Yes, and look, if you look at money flow, let's take the UK, for example. Your average UK investor has been disinvesting from North American equities over 2023 because of that valuation disparity that is now present. And that's creating an opportunity set. So, look, QE was a multi-year journey that led to a lot of assets inflating, a lot of indiscriminate assets inflating. QT is going to be the other half of that trade, and it's going to take time. It's going to be a slow-moving correction. But I feel pretty confident that that dispersion of returns, that disparity of approach, those valuation opportunities, those anomalies that exist within markets are going to create opportunities for nimble traders and nimble investors.
Is that what bolsters your view, Matthew, on buying credit? We've had various people saying it is not rich enough pickings in credit to warrant being long credit, and my risk is that the spreads blow. But what's the justification for being long credit, succinctly?
Yeah, I think in the high yield space, there's a lot more justification. Again, there's that disparity of valuation that's creating opportunities. But if you are worrying about the hard landing, avoiding default is going to be absolutely crucial.
All right, Matthew, stick with us. Much more to talk about. That is Jupiter's Matthew Beasley. But first, Manus, let's get to some of the other top stories that are trending on the terminal this morning. Taiwan's main opposition parties have launched rival bids for the presidency after the dramatic implosion of an alliance that aimed to unseat the ruling party and install a China-friendly government. Terry Gowor, the billionaire founder of Foxconn, withdrew from the race, ending, for now, his years-long pursuit of Taiwan's most powerful job. Manus.
ADNOC is said to be exploring a potential acquisition of Wintershall Dea. That's the European energy explorer. It's backed by BASF. The state-owned Middle Eastern company has been studying a possible bid as it seeks to boost its global footprint. The deal could value the target at more than $11 billion all in.
Elon Musk says strikes holding up Tesla's operations in Sweden are, quote, insane. Garbage collectors, electricians, and postal workers are among the groups refusing to do any tasks related to the electric car maker as they take action in support of car workers.
Coming up in the show, we talk about the key challenges facing the asset management industry. Who better to give you the perspective than Jupiter's Matthew Beasley? Plus, cost-cutting at Barclays, the details to come.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg brief. I'm Manus Cranny in New York, Danny Berger in London. Well, Barclays shares are down more than 11% this year. The bank is reported to be working on a cost-cutting plan of up to $1.3 billion, according to Reuters. An estimated 2,000 jobs could be on the line. Let's bring in Jenny Serrain on the story. Jenny, breaking headlines, of course, that the head of FX structure, Jeremy Monnier, is to exit the bank. So some high-level names will go. But what do we know so far about the broader cost-cut story?
Yeah, you know, I think what they announced back in earnings in the third quarter was that they were going to be taking some structural cost actions. And so what Reuters reported yesterday was that they have decided to cut about 2,000 jobs in their Barclays Execution Services division. So that's back office folks. So not more of the front office folks like this FX fella that we've reported has left. So a little bit different. But I think, you know, in general, Barclays is really under a lot of pressure right now. To your point earlier, their stock is down a lot. Investors are losing patience. They really want to see a turnaround from this bank.
I'm guessing this effort, as you're saying, is part of that turnaround effort, but is there more to come then? I mean, is it what they talked about in earnings, is 2,000 job cuts or whatever this might be enough to really underscore what they're trying to achieve?
I think there's still more to come. So they've said that in February they're going to provide a bigger update to investors on their strategy and sort of what CS Venkatakrishnan, their CEO, is really hoping to do to really turn around returns. I think obviously these moves today with the job cuts and the $1 billion in cost cuts is big, but it's not quite what investors are hoping for.
Okay, Jenny, thank you very much. Jenny Serrain there on the Barclays job cuts. Matthew Beasley is the CEO of Jupiter Asset Management. You're not a bank, but you are asset management. You've been in the seat nearly a year, Matthew. We know that you've done some trimming. 80 jobs were cut. Are you the right size? If clients have been holding back, it's been a tough year in active management, as you've said. Are you the right size? Do you anticipate having to restructure and cut more jobs 2024?
No, we are the right size, and we think we have the right people doing the right roles, given the changing dynamics of the asset management industry. But the environment is tough, and the environment's probably going to stay tough. The active management industry is a mature industry in many places, a competitive industry, and we face lots of pressures. We face a pressure from the market. We talked about the cycle and the fact that it's been really tough to deliver active, excellent investment returns. But more than that, of course, we face pressures from passive players as well, and we've got to be sharp if we're going to be able to clearly evidence our truly active proposition as worthy within investment portfolios.
Given that difficulty, do you think there's consolidation to come in the space. But would you consider buying anyone up? I mean, what does that look like?
Yeah, well, consolidation hasn't really happened in the asset management industry. I think that's because this is such a people-centric business. And while, of course, most deals, most transactions with businesses come together in most asset classes, you are looking for synergies. You're looking for cost synergies. You're looking for wider scale benefits. Now, our industry needs more scale, and that's really important. But the challenge of asset management is it almost certainly comes with dyssynergies as you bring businesses together. You almost certainly have overlapping investment talent. And so very often you have a big offset on your cost synergy with a loss of revenue, a revenue dyssynergy. And that, I think, has been the key reason why a lot of consolidation has not happened in asset management industry.
Does that mean that no more is going to happen then?
Well, I think it's hard. I think the bar is high for asset management consolidation. And the other thing, of course, to remember as well is that often consolidation, bringing together two managers, making changes to your investment management lineup, that's often not good for clients. And for an industry that solely relies on client goodwill and client money being invested in their funds, that's not a great thing to be doing.
Well, goodwill's, built and shattered on returns. But, of course, fees matter, and you've cut, a couple of basis points off fee margins. And this goes to the point. I understand commoditization of fees. We've all lived through it in various industries at various times. Here you are skimming back on albeit 2 basis points, but you see more compression in fees next year. Is that how you sustain market share?
Yes, I think you have to be competitive from a fee perspective and say the reality is there is a substitution product out there in the marketplace in the form of passive investment opportunities. And therefore active, to truly show its value, has to be priced appropriately to attract clients into active products, not just into passive products. And of course, there's a lot of regulatory pressures too to make sure that fees are appropriate given active opportunity sets that are available.
But then, of course, we see Goldman Sachs upping the game in asset management in terms of the remuneration structure, and they're upping the, the share of the pie. Are you prepared to do that? Is that who you are as a CEO? Are you upping the piece of the pie available in terms of payouts, active remuneration?
Yes, so in our most recent comments to shareholders, we made 3 observations about where we're investing. As you pointed out, we are investing in our clients, and we've made some changes to our fee structures to show that investment into our clients. We've been investing heavily into our technology infrastructure to make sure we can really think about that client experience and service our clients in the way that they want to be serviced today.
But will you up the proportion that you pay to them? Will you up the proportion that you pay to the asset managers? That's what we want to know.
No, and the third thing that we also announced is that we are prepared to and will be investing in our people as well, recognizing that retaining talented people in a competitive marketplace is absolutely vital, given this is a people-driven business.
I think that seems tough. I mean, you're going to knock off some of the fees and pay people more. That's just tough. It seems like it's margin compression, is it not?
Yeah, look, the industry has suffered from margin compression over multiple years. But look, we are still a profitable industry. And so we, Jupiter, are still a very profitable company, strong, robust balance sheet. I think we can afford to make some of these investments to build tenure in our client relationships.
As part of some of the changes you've made, too, I know you've also made it a mission to expand internationally as well through the rest of Europe. I believe maybe even Asia was in there, too. At the same time, I know you've been vocal as well about post-Brexit issues in this country. Are those two connected in any way?
No, look, the UK is a massively important market for Jupiter. It's still 2/3 of our assets under management, and most of our workforce is based here in the UK. But look, back to everything we've just been talking about, the pressures our industry faces, it makes scale ever more important. And we're wonderfully scaled here in the UK. The opportunity for Jupiter is to become more scaled in other geographies. And that's why we're so focused on what we can do in Europe, where we've been present for multiple years, but also in Asia, where clearly there's a very large opportunity. And we think we've got active investment products that will resonate strongly in those marketplaces.
Well, here's what I'll tell you what you got to do, Matthew. You got to move more into the U.S. so you can get up at 5 a.m. and join Manus in the New York studio. I think that's what's next for you.
I'll let you know.
Okay, perfect. Manus will come with a coffee, right, Manus? You got that covered for
Matthew? We'll welcome Matthew in, because U.S. exceptionalism and, King Dollar, U.S. exceptionalism, it's all for real. It really is, Matthew. I'm living the dream.
I love it. I love it. It's a day after Thanksgiving. We got to give the Americans a shout out. Matthew, thank you so much for joining. That is Jupiter's Matthew Beasley.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A quick check on your bond market. U.S. 10-year yields higher by about 7 basis points. Manis, it's Germany that's pushing things higher. Germany suspending debt limits for a 4th consecutive year. Also hearing from Madame Lagarde saying that battle against inflation is not over, but we've done a lot of rates. Now we can observe, sounding like other central bankers.
They can stand back and observe. Yeah, weather at the peak, as we just heard from Matthew there. Quick snapshot of the UK and Japan. Japan, you're seeing inflation there, 2.9%. That is, again, ahead of the estimates, or the target, I should say, of 2% for the 19th month in a row. JGB's at 777.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
You're welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. The first truce in the Israel-Hamas war has begun. 50 Israeli hostages and 150 Palestinian prisoners are due to be released. Barclays is reporting cutting costs by as much as £1 billion with 2,000 jobs on the line. And it's Black Friday. The holiday shopping season is underway as deal seekers face economic pressures. This bond market is under pressure. 10-year yields moving higher by 7 basis points. It is Germany that is seemingly causing this. Germany potentially looking at lifting debt limits for a fourth consecutive year. It is that fiscal concern filtering through markets, maybe reminding us of what's happening in the U.S. We were closed yesterday for the Thanksgiving Day holiday, so we move higher just under 4.5%. 10-year yields in Japan also moving higher by 5 basis points. Inflation's coming in higher than 2%, 2.9% for the 19th consecutive month. Finally, Manus, Brent crude up just 0.2% because of that OPEC Plus meeting delay. Manus, all I want for you is to be able to go to Vienna and just get one of those hot chocolates in a Christmas market. That's all I want for you.
I was just dreaming about, strudel at the Kempinski and chasing old ministers. It was not to be. It's going to be virtual because, of course, COP begins on the same day. We'll talk more about that in just a moment. You say yields are rising, stocks are going, yeah, we're not bothered. We are watching the fast and furious money flow into equities. That is the view from the CEO of Jupiter Asset Management. He said what's happened in the past 3 months, equities eking out the smallest of greens. Global stocks have had the best month in 3 years. But we've just heard from Jupiter, which is don't be fooled. He said big institutions have not necessarily participated in this massive run higher. This is fast and furious spec money, Matthew Beasley says. The US, however, took the lion's share of the flow, according to Bank of America. $13.9 billion went into US equities. The NASDAQ just flickering into the red on the back of those higher yields. When you look at Europe this morning, up just under 1/8%. Again, Germany, the confidence indicator there, the consumer spending is under pressure. BASF, however, is bid up as we have these discussions that ADNOC may bid for Wintershall Dea. So keep an eye on BASF through this Black Friday. I'm going to be out there, Danny, battling hard on 5th Avenue. Got my eye on a new suit. I'm all there. I'm locked and loaded. Danny, good morning.
Manus, I don't understand because you didn't participate in the turkey of Thanksgiving, but you're going to do the consumer aspect. You've skipped over the medium American stuff and gone full-blown American.
I had the full Irish kind of version of Thanksgiving. A little bit of steak, bit of broccoli rabe, because that's how you get into the whole American thing, and then we just had apple pie. So, it's quasi-Irish, quasi-American, sort of a foot in both camps, Danny. But don't worry, I went online and bought a TV.
I thought an Irish Thanksgiving would be like some
potatoes.
Black pudding and potatoes. You went straight to potatoes, not me. I assumed black pudding or something like that.
And I'd be harried by most of the Irish people that have a Bloomberg terminal on their IB. No, you're quite right. We had beautiful Clonakilty black pudding along with a little bit of applesauce. There you go. Finesse in Irish. Danny, good morning.
I love it. Good morning, Manus. Hopefully I'll be there next year for Thanksgiving. I'll bring the pie. You can bring the black pudding. Okay, Manus, let's change gears here a bit and talk about what's happening in the Middle East. Now, we have the first truce since the war between Israel and Hamas erupted last month. It's underway, and it sets the stage for the exchange of dozens of hostages held by militants in Gaza in return for Palestinians imprisoned by Israel. Joining us now is Bloomberg's Honor Ant. Honor, what is the latest with the truce?
Well, it's been
just over 4 hours since the truce between Israel and Hamas began, and so far the truce has been holding. It's going to last for 4 days, at least that's the original agreement between the two sides, and as part of that, as you said, Hamas will release a total of 50 Israeli captives to Israel over the next 4 days, and in exchange for the release of about 150 Palestinian prisoners that are currently being held in Israeli prisons.
And of course, Netanyahu has made it very clear that despite these 4 days, this is not the end of the war by any stretch for Netanyahu. So do you think these 4 days will hold? Do you think the 4 days that have been promised will hold, Honor?
Yeah, I think it's important to remember that the original truce agreement already has a built-in clause that allows an extension of the original 4-day truce by a day each time Israel agrees to and releases 10 Israeli hostages. Now, whether or not that results in a full-time, longer-term ceasefire, that's something that, as you said, the Israeli government said it's not keen on at the moment. But one should also remember the fact that just until 2 weeks ago, Israeli government was not so keen on any truce that lasted more than a few hours. So it is the hope among mediators such as Qatar, the US, and Egypt, among other countries, that giving more time to diplomacy to work might allow them to bring closer the two parties to this fighting, which is Hamas and Israel, and possibly turn this 4-day truce into a prelude to a longer-lasting peace.
Okay, let's see if it holds in the first instance. Honor, thank you very much. Honor Arndt in Istanbul, tracking the latest news flow on the Israel and the Hamas-Israel war. Well, oil is on its 3rd day of declines. OPEC Plus has announced a delay to their meeting. It will now be held online, but the team over at Citi say the delay, quote, heightens the drama, probably not the outcome. Let's inject a little bit of drama to this Friday of thin trading. Nadia Martin-Wigan is the director of Svelland Capital. So we danced around. I booked flights, cancelled them, rebooked them, cancelled them. I'm not going anywhere now. The bottom line is, do you believe that it is vexation between Angola, Nigeria, and Saudi Arabia, or is there something more at play? Because the UAE gets a new quota going into January as well. So what level of angst is there in the ranks at OPEC? Good morning.
Good morning. I think it's around the whole group, right? We've had the UAE already secure their higher level, and when this was initially approached within the group, the lower level for the African countries was supposed to also come. They just haven't officially agreed to that. So to go back on what the UAE has already agreed, it shouldn't really be such a big issue. The question is, though, we think that probably Saudi Arabia is trying to push for deeper cuts because they want to protect this price floor. Yeah. And therefore, we see if they don't cut more deeply, that we will see stock builds in the first quarter. So on the UAE side, it means that Saudi Arabia wants them to not actually produce 200,000 barrels per day more as they could come January 1st.
I can't help but wonder, Nadia, if this discord is deep, if it's something that is difficult to resolve, does it threaten Saudi's position or willingness to be that swing producer?
Yeah, I think it is indicating that they are tired of carrying the load themselves, and this is when we look at the other countries participating. Russia has not been as compliant as maybe they would have hoped. They say one thing and then they produce a bit more. So I think it's also a warning to Russia. UAE, of course, is trying to take that #2 spot as being the most important member of OPEC. So they will probably go along with the Saudi line, but they also have to think about the bigger picture, because what they said last year when they initiated these cuts in October is they wanted duration, right? They want investors back into the market. And so if they're going for a longer period of time on the cut, they need to think about the future, not only about Q1, but about the rest of the year and what these additional cuts do to their market share when we see US production rising, when we have a new pipeline coming from Canada that is going to the coast to directly deliver to China, and when we see growth in Brazil and Guyana.
I mean, that excess supply lack of pressure, let's say, on Iran, oversupply by Iraq, is what's causing the greatest disparity of all. I want to show you the chart, which is the spread. It's deck spread. And that collapse, it's a manifestation of many other spreads as well. That screams oversupply going into 2024 because they didn't see the draws in this back quarter. So this is a compounding of supply rather than an emaciated demand.
It is driven predominantly, as you say, by supply. And this is when we look at Iran. Iran has grown in production 600,000 barrels per day this year. We believe they have the capacity to grow another 400,000 barrels per day next year, which the market is not focusing on. And this is where, when OPEC as a group thinks about things, they have to look at what they will allow for various countries. You know, Libya has been producing very well, relatively speaking, this year. It's always one moment away from a potential outage. But this is when they look at everyone together, they have to plan for that. When we look at Iraq, their southern export capacity has risen. So right now they've been compliant, driven by the KRG closure. But, you know, the South is looking like they want to add. So absolutely, they need to keep control of that. We are firm believers in a soft landing in the U.S. So we think that demand will hold up next year.
Okay.
But it's not going to be as strong as it was this year globally.
Right. And Nadia, you also say that you think oil has hit a price ceiling with the current rate environment when it went above $95 a barrel in September. If that's the ceiling, what is your call on the floor, Nadia?
Well, I think that's what this meeting is all about. Right now, we see that the market is trading comfortably in, okay, it's low volumes, but, you know, spreads have held up in the last few days. And we think physical buying is going on in the market. So the next question, though, is about that January number, because U.S. exports, last time we had refinery maintenance in October, skyrocketed. It hit 5 million barrels per day. And so this is what we're looking at potentially happening, at least approaching that in February, March. So will the demand be there? And is OPEC happy for the U.S. to fill that excess demand? We think the demands can be there, but will OPEC want to hold back with their own customers and allow them to buy American?
All right, we'll see what that November 30th online meeting brings. Hopefully you and Manus will be in that chat room somewhere together. Nadia, thank you so much. Nadia Martin-Wigan. Now, coming up from big deals to diamond watches, we're going to discuss what's in store and what's at stake this holiday shopping season after a month, Manus, where at least stock investors did a lot of shopping in this market.
They sure did, and U.S. exceptionalism was there despite rising yields this morning. Let's have a look at equities. You've got S&P 500 and the dollar on the move this morning across the assets. A little bit of green on the screen. There's a high degree of absent liquidity this morning. Dollar is flat, and you can see crude down by 0.5% as OPEC Plus prevaricates on what to do next. And will Saudi Arabia extend their cuts into 2024? Good morning from New York and London.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
The reception, the acceptance of Puro Sangue has been extraordinarily high. we had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of puro sangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
You're watching Bloomberg Brief. Danny Berger in London, Manish Cranny in New York. Retailers are once again pinning hopes on Black Friday being a big shopping day. But will big discounts be enough to lure big shoppers? Let's bring in Bloomberg's Andrea Felstead for more on this, who tracks the space very closely. Andrea, just given the difficult environment right now that we're in, is this Black Friday taking on more importance than past years?
I think Black Friday is always a standoff between consumers and retailers. This year you've got quite an interesting dynamic. The big stock mountain that we had last year that people were still trying to get rid of Black Friday, that's largely been controlled. So that might mean deals aren't quite as good. Now, on the other hand, you've got the consumer who knows inflation is coming down, who's still under pressure, and is really looking for big discounts. BCG found that, the minimum discount consumers wanted was 30%. So I think it's going to be quite an interesting dynamic as we move through today and this weekend.
Depends whether there's a buyer strike. I've been online, Andrea, got the new telly, got more light bulbs flashing at me than we have on an average day at Bloomberg. So I'm out there. I've been loyal to the online, and I bought one of those little, the wee hoovers that you don't do anything. You just set him off and he runs around the house on his own. Yeah, I'll let you know how that goes.
Those are great. A little robot in your home.
Yeah, I'll have somebody to talk to. Let's. Okay, this is going badly. What can we expect from online sales?
Well, online sales have actually really suffered this year because we all want to go back to stores. So, there are always online deals, but it wouldn't be surprising to see more of a mix between online and bricks and mortar this year if we're going to shop in the same way as we have been all year.
I've actually named my robot vacuum. I'm not going to say the name on air.
Well. Hold on. This is a moment of truth and reconciliation on the show.
I've literally named it, so I don't think whatever you say about having someone to talk to is as depressing as me giving my. It's adorable. They're so cute. Okay, let's stop this. Andrea, back to the story. Are we seeing any big trends emerge ahead of this holiday season?
Well, the consumer, if you look at the US, the consumer does seem to be cracking in a lot of areas. We had Target talking about pressure on discretionary spending. We had Walmart say that, the last 2 weeks of October were like different trends they'd seen all through the rest of the year. Savings rates are falling, credit is going up. We're just getting this message, even in luxury, the aspirational shopper. So we're getting this message that the consumer is suffering. So I think what we will see is that shoppers will use Black Friday to do their Christmas shopping. They will use it to maybe buy essentials that they hope to get cheaper rather than splurge on extra things. So even if we get a great Black Friday, doesn't necessarily mean a really good festive golden quarter as a whole.
Tell me this. When I lived in Dubai, I'd do the check going through the airport, and there was never a Rolex to be had. And then you go into Dubai Mall and you had to go on the list. You couldn't get yourself the watch that you wanted. You had to be a spender at a certain amount to get the watch that you wanted. So please tell me, I was never a big enough spender to hit the list. Is it a good time now for me to get the sort of the all-in Submariner, sort of like heavy-handed kind of watch, or should I be going for something a little bit more sophisticated, a light piece of Gucci?
If you can find one, then obviously, you know, it's probably, you know, a nice treat. Waiting lists are still going up, are still being added to for those popular models. Where prices are falling is on the secondary market. Now, Rolex prices, according to watch charts, are at about a 30-month low. Now, what we don't know is whether this is the bottom of the market, because things stabilised at the end of last year, beginning of this year, up to about March time, and then they've fallen again. So what we don't know is whether those people that really sort of, you know, enthusiasts that amass large collections over the last 5 years may have used leverage to help finance those, whether they're going to come under pressure and have to liquidate their inventories. So that's a big unknown.
Yeah, when they say the second-hand watch market it is vast, and I said a light piece of Gucci, of course I meant Cartier. Andrea, thank you very much. Andrea Felstead of Bloomberg Opinion. We'll take anything. Of course, Caroline Hyde is going to catch up with the CEO of Macy's. That's at 7 a.m. Eastern Time. So we're going to talk, well, we're going to talk about Danny Berger's footwear in just a moment, aren't we? I mean, you know, I will give you this. So we're talking about Golden Goose. Golden Goose are going to have an IPO, we understand. That's the latest rumor, isn't it?
Yep. Yeah, and it is. And there's a great Bloomberg story about this, that all the bankers that were in the room with Golden Goose saying, hey, sign us on, let me do work for you, apparently they all rushed out and went to go buy Golden Goose shoes before this meeting. 20 of the bankers had shoes, and apparently one went off to a store to quickly buy one and realized that all of his other banking competitors had taken all the Golden Goose shoes for this meeting.
You know, the really sad part of that is they actually think that that's going to make a difference when you're pitching to the people on the product. I think you might find that the fees and the capacity to book run a little bit more important than actually wearing the shoes. But here's the thing. We've actually got a picture of, yes, I do believe, yes, this is what Danny Berger paid. How much did you pay for those shoes? Because they come with dirt attached. They actually come with stains and dirt. You paid for a pair of shoes with dirt.
No, but Manus, look at me. I'm a banker. This is how bankers dress now.
I mean, all I can say is this, Danny Berger. Birkenstock went out at $46. It was one of the most underwhelming billion-dollar IPOs of this year. But, of course, one cannot deride the Golden Goose shoes. They are beautiful. Danny has bought a pair. There are many people interested in them. They are.
And let me just say, Manus, it's not dirt. It's artfully placed scuffs. Why wouldn't you spend hundreds of pounds?
Me? You're like trying to sell ice to, to somebody that lives in the Arctic.
It's cheaper than me buying a Rolex for you, Manus. I think I can afford a pair of sneakers. Maybe not a Rolex for you. Not
much more a Panerai kind of guy. I just don't have the. I just don't have the wrist for that Rolex. It's much more refined Panerai. I'll leave you with that thought. Danny Berger coming up on the show. We're going to talk about market moving events throughout the day. I'm going to Saks. I'll leave you with that thought. Good morning.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Let's get you set up for your Friday. Here's a look at what's ahead. U.S. markets will be closing early for the holiday weekend. Equities close at 1 p.m., bonds at 2 p.m. But ahead of that, we are going to get U.S. PMI data that hits at 9:45 a.m. Eastern. Plus, the ECB's Guindos and De Cos both speak in Spain, 8 a.m. and 10 a.m. Eastern, respectively. And it's Black Friday, so don't miss our interview with Macy's CEO Jeff Gannett at 7:30 a.m. Eastern. Manus, before the last commercial break, you said you were going to Saks. You said you were going to leave us with that thought. I'm not letting you get away with that. What are you going to go buy at Saks? I need to know what your Black Friday shopping list looks like.
I do need a revamp in the suits, to be really honest with you. And this whole sort of like, I'm lost on this whole weather thing here. It goes from cold to sunny.
Well, the suits are like a tax write-off, right? Because it's for work, so
You've just given me my first tax write-off. This is a moment. I keep looking at the paycheck and it's got tax, 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 tax. In the UAE,
but Manus, one thing...
No tax.
One thing I will say, you don't have to do this, but what I will say is Black Friday shopping, you are also supposed to buy gifts for other people. Just, whether you want to or not, that is kind of maybe the point of it.
You really serious? I'm supposed to buy like gifts for other people? That's not.
I am in the market for a new pair of Golden Goose shoes. If you want to, get me those.
We're not going back to the Golden Goose shoes. We have done enough of that. Let's talk about iRobot. I mean, I'm amazed. These little robots that clean your house. It's wonderful.
Yeah, and not just that. They're gaining today. There was a Reuters report yesterday about this. I mean, it's almost serendipitous. We're just talking about our robots, and there you go. Up 31%, a win from unconditional EU approval for an iRobot deal, Manus.
It's coming, Danny. The robots are coming for us. I'll tell you what is coming up. Bloomberg Surveillance. That's it for Brief. Have a great holiday weekend from Danny and myself.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California in San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
For longer sort of narrative is still very much in play.
Inflation has been high, and at some point that should weigh on activity. We probably do get some type of broader downturn in the economy.
We don't think there's a recession coming next year. It's just a gradual slowdown.
Highest conviction trade is no eases, Fed on hold till at least after the election.
It needs to be a pretty catastrophic crisis, I think, for them to be forced into really, really loosening policy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
We are thankful for one more trading day before the weekend. Gina Martin Adams alongside me. Tom and John both have the day off today on this post-Thanksgiving day. Good morning. Welcome. This is Bloomberg Surveillance Live on Bloomberg TV and radio. Gina Martin Adams, I guess Tom would say, pulled the short straw to actually have to sit here post-Thanksgiving. How was your Thanksgiving?
It was great, thank you. How was yours?
It was good. What was your favorite meal? I actually did some research about what aspect of the meal people like best.
Oh, good.
What is sort of like always the highlight?
This is almost impossible for me to choose because I like all of it, but I really love the sides. My husband is a specialist in the side dishes, from the green bean casserole to the stuffing to all kinds of corn dishes and things. So all of the sides are wonderful. As much as I love a turkey, I love all the sides.
Well, yeah,
the variety in the sides.
So there was an Associated Press study that came out that showed that 3 in 10 people see the turkey as the highlight. I was sort of found that odd, but more than 20% thought that it was really the sides. Anyway, this is a morning that is slow, and a lot of people are going to be talking about what they talked about last night at the Thanksgiving dinner. They also will be shopping Black Friday. And Gina, you're the best person I could imagine having on to talk about how important it is to get a read on how much the consumer spending continues into the season.
Yeah, I think it's going to be really interesting because there are actually very, very low expectations for the consumer. And I think that this is something that is not oftentimes discussed. We're all worried about the consumer, but we've all been worried about the consumer for so long. So I actually think that what we need to realize with this season is how bad is it getting, not is it still good. And we can talk a lot more about that going forward, but I think that that's the psychology that's embedded in market prices is, oh gosh, is the consumer going to hold in there? We're so worried about the consumer, and we have been for quite some time. They keep sort of beating our low expectations bar.
Is it a good thing or a bad thing if people come out to take advantage of discounts today and for Cyber Monday?
Well, I think this is a really good question because to me, it's a good thing that they're shopping at all, considering expectations. And if they're shopping last week, this week, next week, they're shopping. They're still shopping. Because if you think about the broader landscape, there's no fantastic products that are making everybody run out and get them. There's no big fancy gadget, no new electronic device that everybody's got to have to stimulate them to go out. So that already sets the bar very, very low. They just need to shop at this point in time. And I know that that sounds crazy, but we've been in an environment where all they've been spending on anyway for the last year is really services. They've been pulling back on goods investment or goods spending at all. So if you do get consumers going out and buying a few TVs, a few electronic devices, and some of those holiday gifts, I do think that that will be enough to sort of sustain expectations. But will we get that is still a question to me.
Yeah, and although there is this feeling that maybe people just need to get out of the house after their meals last night and to avoid further conversation with their families, there is this issue. As we take a look today, there is good news, which is that there is this ceasefire that is starting between Hamas and Israel, and the hostage release of people who have been held by Hamas, as well as a prisoner release by Israel. There is a feeling, in my view, that markets have moved on from this story.
Okay.
Do you believe that, or do you think that people are still watching this? I know that on a personal level, everyone is watching and reading all of the developments. It is really embroiling a lot of people into active debate and a lot of anger. But from a market perspective, how much is there any kind of care? Because I don't see it reflected anywhere.
Right. No, I think that this is a really good point, because markets always struggle to price some sort of geopolitical risk in general. And we didn't see a tremendous amount of market activity related to the war, even as it broke out. And the reason for that is because we did not see huge changes in commodity prices, nor inflation expectations, nor huge budget potential impacts as a result of this particular conflict. So I think that the market struggles to price it as it is. And so therefore it feels like it's a peripheral issue. That said, to the degree that you're feeling it, any trader is feeling it, any investor is feeling it, there is certainly some sort of depressed risk premium tolerance, right? A risk tolerance that I think continues to play out in markets. And this might be a little bit of relief from a risk intolerant kind of climate.
And we'll get more into that in a bit. I do want to just say we are seeing a pretty quiet market. People are kind of maybe admired in their tryptophan. At least if you look at the equity space, you could see up about 0.1% after the closure yesterday in the United States, 45.72. Again, kind of amazing, given some of the levels people were expecting to end the year. It is interesting to note the 10-year yield up almost 7 basis points, and this comes on some discussion from Germany about not sticking with their net zero debt incursion, and we can talk more about that coming up as well. What we're looking at today, 7 a.m., we're going to have an interview with Macy's CEO Jeff Jeanette. He's going to be joining Bloomberg Television with our own Caroline Hyde, who will be on the floor joining the shoppers. At 9:45 a.m., we get the S&P Global U.S. PMI data, taking a look at whether we start to see a softening on the services side. As Gina was saying, we really have seen the spending on the services side. How much do you start to see that wane? And then markets do close early. Stock market closes at 1 p.m. Bond market closes at 2 p.m. So for those who are stuck trading, at least there is a reprieve at the end of the tunnel, and you can go crash afterwards. Joining us now is Steve Sosnick, Chief Strategist at Interactive Brokers, someone who has seen the different narrative shifts and the different swings of the market and the different kinds of technical underpinnings all year. I'm curious from you how much you think that this rally to risk has legs, how much the sort of holiday spirit can last.
Good morning, Lisa. You know, it's one of these things that we can always, markets can always just move longer than they should or would or could, just because people, you know, it's the old animal spirits argument, and I think we can see this across the board. The question to me is, how can it stay broad? How can we get beyond, you know, 7 stocks driving the narrative and onto a broader narrative?
Steve, when you look at the activity inside Interactive Brokers, I'm very curious as to what you're seeing with respect to traders and their general risk tolerance this year. I think we all know, you go back to 2021 and the meme stock craze was sort of peak activity, peak risk tolerance. But how do you see this year playing out relative to last year, and what do you think that means for 2024 going forward?
Few themes, you know, are different. Certainly, short-term option trading has really been you know, a game changer for a lot of the customers. You know, we've always been an option trading focused firm, and they're certainly diving in full force into, you know, the so-called zero-dated options, you know, the daily expirations on index options and ETFs. No one really traded S&P index options. No individuals used to do it. Now they do it all the time because they're cash settled and give you tremendous leverage. On the other hand, they also are the most likely options to expire, without any premium, of course, but that's a discussion for another time. They also tend to be very focused on their favorite names. I look at, the top names that they're trading all the time. It's always pretty much Tesla, NVIDIA, AMD, SQQQ, TQQQ. So they tend to be speculating. They tend to like their names and trade in and out. And they have been, on balance, accumulating those top names more than selling them off. But they haven't really been diving in whole hog recently. So it's definitely a bit of a speculation in the names you'd expect them to be speculating in, and a lot of two-sided trading, possibly even more than I expected, because they're not really net. They haven't been huge net buyers in this uptrend. They've just sort of been trading around their favorite positions.
Interesting. So this theme of concentration risk kind of continues to plague us, both from a trader perspective as well as a market perspective. What do you think are the catalysts that are likely to emerge to really shift that? What could we see emerge in the market that really improves the confidence and broadens out the trade beyond those favorite names, the top 7 in the S&P 500, or those sort of more selective trading?
I think we basically need to get into a sense where we need some clarity on the economy, one way or the other. And we need some, you were talking about consumer spending at the top of the hour. We need a lot of clarity in terms of consumer spending. We also, we just basically need to know, is this going to be a soft landing? Is the Fed going to be cutting rates? And if they are cutting rates, why will they be cutting rates? Because that's really a big bet that's being placed in the market, is somehow, we're going to get maybe a rate cut by May, certainly by June, another one by July. But why? The question is, under what circumstances? Is the Fed going to just be preemptively deciding real interest rates are too high? Are we going to have won the battle against inflation, the war against inflation? Or are things going to be lousy? The problem is inherent in a lot of these bets about cutting rates is very much of a careful what you wish for scenario. Do we want the sort of circumstances that will force the Fed to cut rates aggressively? Because every inclination that I see is for them to move very slowly. They're not going to come down at the pace that they went up, barring some sort of reason for them to do so. Without this clarity, it's very hard to sort of move away from the stuff that's working into the stuff that's more of a bit of a value hunt.
So what are you looking for, Steve, when it comes to sniffing out some sort of downturn in retail spending? We were talking, is it a good thing or a bad thing if people are looking for discounts today when they go out? There is this issue of, is all spending good spending?
I think from an economic point of view, I guess so. I mean, I guess it's like empty calories versus healthy calories. I think if you're doing economic measures, it doesn't really matter. My perspective on Black Friday is possibly an odd one, because my dad used to be a retail analyst before he retired. Was a retail analyst covered the retail industry, and I used to have to go and sit and count bags on Black Friday sometimes for him.
You must be so grateful you don't have to do that today. Carry on.
I don't go anywhere near a store today as a result of that. But so it was always the metrics: are the parking lots crowded? Are the malls crowded? But his thing was make sure that people are buying things. And so I think it really doesn't matter too much in terms of how they're spending. I think it's just really a question of consumer confidence. Are they spending? Do they feel okay? We're in an interesting spot now where the vast majority of people who want jobs have them. That's what an unemployment rate with a 3 handle tells you, is that people who are the vast majority of people have the jobs that can afford, that can allow them to go buy things. On the other hand, they've been tightening their wallets, they've been tightening their belts. It's kind of interesting, gasoline prices, which is a big driver of consumer sentiment and people's perceptions about inflation, have actually been coming down. But the narrative out there is still that this economy is not good, despite any evidence to the fact that it actually is okay, or actually quite good in many respects. So the question is, will the customers be slowing down their spending? I think we just want to see them spending. And, you know, if the early sales that have been coming through my inbox are any indication, the retailers are nervous that customers won't. And as Gina alluded to earlier, is let's see if they do, because let's see if the expectations are dire enough, so to speak.
Steve Sosnick of Interactive Brokers, thank you so much, and happy Thanksgiving. Thank you for being on the show with us this morning when most people are sleeping in. Gina, I do think about that, this idea that no one wants to be near a store on a day where there are incredible discounts and you are going to have massive hordes. I wonder how much it's going to move online, whether people just go to the stores to get out of the house, try something on, and then go home and order it online.
Yeah, and also how much it gets spread out over time now that online is an option. Now that we have the option of not going to stores, it's permanently embedded after the pandemic experience. What is the reason really to get out and go to a store? You get out and go to the park, you can get out and go to all kinds of other places. It doesn't have to be the store, because of the convenience of online shopping. And I think we do see the season generally spread out as a result.
Did you ever line up outside of the store at
I never did.
4 a.m.?
I never did.
3:30 a.m.?
No. I can't say that I was ever into this. I remember as a child when there were really key toys.
Yeah.
My mom making a huge effort to make sure that we got those toys, and I can remember her getting out and getting things done.
Like Cabbage Patch
thankfully,
Kids?
exactly,
Oh, that's
Cabbage
exactly
Patch
what
Kids.
the
I
whole
had
craze.
the twin set.
Oh
it
my
was
goodness,
amazing,
you did.
right?
I
It
had
was
to,
amazing.
buy a used one.
So she did that on our behalf and for us, and I'm grateful. But I certainly never have had the
Thank
chance
you
to do so.
Gina Martin Adams' mom from New York. This is Bloomberg.
Was going to keep Great World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Now, some people might say that insurance is a boring business, but is that not the case?
No, I find it very interesting. I mean, you're not doing the same thing all the time. I liked it because it had a balance of doing different things at once.
Hamas also took hostages in order to constrain and delay an Israeli ground campaign. The hope is that pressure will mount. A 4-day pause will turn into a 6, 7, 8, 10-day pause. Pressure will mount for what Hamas really wants, which is an extended and prolonged ceasefire.
And we seem to have gotten a pause, at least for now, as you do get the hostage release of Hamas to Israel. And there is this ceasefire, at least temporarily for the moment. That was Aaron David Miller of the Carnegie Endowment for International Peace speaking with us on Wednesday. A real question here of what actually is transpiring while there is this temporary pause in fighting, and how likely it is that it actually can extend into either a prolonged ceasefire or a prolonged resolution in some capacity that could create an end to a lot of the suffering. Bobby Ghosh joining us now, Bloomberg opinion editor. And Bobby, I want to start there. How do you understand what this is? Whether it's a pause, whether it's a temporary ceasefire, whatever language you want to place around this?
I suppose you could say this is a cessation of hostilities. It matches the definition of a truce. Both sides have agreed in the middle of the conflict to stop shooting at each other, allowing some humanitarian effort to take place, and an exchange of hostages from one side, prisoners from the other. It meets the definition of a truce, and it's only meant to last for 4 days. Israel has been signaling right from the start that it's not interested in a longer duration at this point, that 4 days is what it'll allow. And then Benjamin Netanyahu, the prime minister, has said it'll resume the war until, by its definition, Hamas has been completely destroyed. There has been some talk that the truce could be postponed day by day if Hamas continues to release more hostages. But then there are military calculations that Israel would have to make. Clearly, Israel feels that 4 days is a good enough time to extract some hostages without giving Hamas the breathing room to rebuild its sort of depleted weapons, to regroup, to reorganize its forces, and represent a greater level of danger. Whether that will still be the calculation on day 5, day 6, day 7, we'll have to see.
Do we have a sense, Bobby, of just what kind of progress the Israeli military has made, of exactly how far they are in their goal?
Well, the goal is so vague that it's hard to tell. Destroy Hamas is a very sort of impossible thing to calculate, because we're not talking about a traditional military force. This is a terrorist group that lives within a civilian population. Israel has surrounded Gaza City, so the northern part of the Gaza Strip. It has destroyed vast proportions of Gaza City. It has told the Palestinians who are living there to go south to the southern part of the Gaza Strip. But now it feels that, and this should have been predictable, that some of the Hamas leadership and many of the fighters traveled with the Israelis who were, beg your pardon, Palestinians who went to the south. So now what do? You can't tell the people who are in the south to keep going, because the Egyptians beyond the south won't have them. It has now designated a smaller strip of land along the Mediterranean coast, about 2.5 square miles, saying that people should go there. But of course, a lot of Hamas people will go as well. So what do you mean by destroying Hamas? And if the goal cannot be defined, then it's almost impossible to say how far they have succeeded in that goal.
Bobby, can you give us a deeper sense of the hostages that will be released, and who are they? How many are there? What nationality? Where will they go? Where will they go to seek refuge and or potential permanent residence?
Well, 50 hostages is the number we are hearing, women and children, all of them. Some foreign nationals, but not very many. Most of these are Israelis. And on the other side, Israel will be releasing 150 people that it has in its Palestinians that it has in its prisons. Israel says that these will all be women or children or juveniles, people below the age, boys below the age of 18. Those are the terms at the moment.
And what is the temperature of the surrounding nations with respect to this temporary ceasefire and the hostage release? If you could characterize, how is Egypt reacting? All the different nations who have taken on some refugees from the turmoil, what is their temperature right now? Well,
the relief, I suppose, even if it's temporary relief, any cessation of hostilities means that those Palestinians, ordinary civilians, innocent, not participants in any of the terrorist activities, that those people will get at least a little bit of a break, and that humanitarian supplies can now be accelerated into the Gaza Strip, particularly from Egypt. So there's temporary relief, but I don't think that they're going to be satisfied with a 4-day pause, because if all this does is allows some people to be released from both sides, and then hostilities return to where they were, then the neighbors are not going to feel particularly good about it. They've been asking for a ceasefire, which is, I think, in technical terms, a little more advanced than a truce. A truce only means two sides stop fighting. A ceasefire implies at least that they stop fighting and begin discussions to a permanent cessation. That's not happening. Neither Israel nor Hamas so far has indicated any interest in that. And so the neighbors know that this is not going to go away.
Bobby, do we have a sense of what Iran's role in some of these discussions have been, what their agreement has been since they were the financiers behind Hamas? Because we are seeing increased hostilities on the northern border with Hezbollah. Do we have a sense of whether they are in agreement with some sort of truce in the short term and in discussions for a longer term solution?
So Hamas is completely a creature of Iran. It is funded by, trained by, its weapon systems come from Iran, and the similar story with Hezbollah. Iran would have at least have had to sign off on the troops. I can't imagine Hamas making an agreement of this nature, even if it is temporary, without at least acknowledgement and approval from Tehran. Now, the Iranians have not been in person part of the negotiations, which have taken place in Qatar. Iran enjoys good relations with the Qatari authorities, so it might feel that it had indirect representation. But there was not. But as far as we've been told, some of these discussions have been secret. As far as we've been told, Iran has not been at the table in direct discussions. But like I say, they would not have, this truce probably would not have happened without Iran's tacit approval.
Yeah. Bobby, there's this question about just longer term trajectory of what's going to happen, who's going to rebuild Gaza, who will govern it, who will be the leadership that really shepherds some sort of evolution to something else. And there seems to be, at least from what I read, and it is unclear, that there is a reluctance on the part of other Arab nations to really take part in that in any capacity. Do you understand how much wiggle room there is there, why this is?
Well, I can tell you why. It is because the Arab countries say that, look, we can't be responsible for cleaning up Israel's mess. That's the way they look at it. They say that Israel can't keep bombing the Palestinians and expecting that we'll turn up afterwards with a big checkbook and with humanitarian support to fix the rebuild these cities. And then a few years pass and Israel turns up and bombs these cities to the ground again. That's their official position. Is there wiggle room? There might be. I think the Arab neighbors will take on some of that responsibility if, and this is a very big if Israel this time makes firm commitments towards a permanent solution, a two-state solution where Palestinians, whether they're in Gaza or in the West Bank, are allowed to have a much greater degree of freedom than they enjoyed before all of this started, that there is at least that there will be progress guaranteed, whether by the United Nations, the United States, another group of nations, guaranteed progress towards a permanent two-state situation where the Arabs and Israelis can have their respective freedoms under supervision and guarantee, with assurances from both sides that there will not be a resumption either of terrorist attacks by Hamas or of military attacks by Israel. If that sort of a deal is on the table, I could see the Arab states saying, okay, we'll take this.
Bobby Ghosh, thank you so much for being with us and for giving us that clarity. Bobby Ghosh of Bloomberg Opinion, we really appreciate it. Coming up, we've got Mark Chandler of Bannockburn discussing the latest. We do see this ongoing weakness in the dollar, how long that can last. What we are seeing in markets, quiescent, as Tom says, up about 0.1% in the S&P. 10-year yields up markedly, and we'll talk more about that.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
To the start of the trading day on this post-Thanksgiving Friday. Welcome. This is Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Tom and John both off together, maybe admiring John's tree. Gina Martin-Adams very much here, which we are really grateful for. So we can add that to our list of thanks. What we're seeing in the markets is a quiet day, although interesting more in the bond space. We could see that equity is just a little bit of a lift, but giving it back as people parse through some of the Goldilocks talk, plus the prospect of potentially some sort of slowdown. NASDAQ giving away after some of the incredible rally that we've seen. But in the bond space, I really think this is fascinating. And we'll get more into this in just a minute. But Gina, to me, the idea that Europe's market is actually dictating a little bit of the action of the U.S. and that the fear of issuance seems to be climbing back to the fore.
Yeah, and I think it's a global trend among developed markets who spent a lot of money to shelter their economies through the pandemic experience, and that money is continuing to be spent. Now it's a question of how do we fund it? How do we pay this back? Because as we all know, once you start spending and you initiate programs, pulling them back is almost impossible at the federal level. And I think we're experiencing this throughout developed markets. So it's just another stark reminder of the issues that we're having at home are also being replicated abroad.
I thought you were commenting on how people feel about the retail season. Once you start spending, it just keeps going and going. And you are seeing a bit of a euro pop, although marginal. 109.12. It is amazing to see how much euro strength versus the dollar there has been over the past couple of weeks. We were at 106, a couple of weeks ago in terms of the cross. But again, how much does this have to do with slightly better than expected data over in Europe versus this feeling that maybe the U.S. isn't going to raise rates further and we are going to get some sort of rate cutting cycle that starts next year. Under surveillance this morning, a 4-day truce is in effect between Hamas and Israel after weeks of delicate talks. Qatar, the U.S., and Egypt all are brokering the deal. Hamas is expected to release 50 of nearly 240 hostages it captured from Israel last month. Israel will release 150 jailed Palestinians and allow more aid into Gaza. This is the first major pause in fighting since the attack on Israel by Hamas on October 7th. The Israeli military vowing the war is not over and will continue once the truce ends in order to destroy Hamas. I have to say, Gina, I spent a lot of time thinking about just the details, the granular details about this agreement. What kind of trauma the hostages who are released are going to be coming back with, right? In terms of coming to a hospital and getting cared for. What's going to happen to people who have been displaced and are trying to figure out what do we do next now that we don't have to worry about being bombed? The amount of trauma in all of these parts is just mind-boggling.
Yeah, and also that the idea that this trauma is only potentially partially paused. I mean, this idea that it's a 4-day pause and yet it's coming back.